Hey guys, good afternoon, everybody. I'm gonna go and set up this room real quick and then we'll get started. So I'm just get all the stuff over here. It's good. All right, cool. All right, solid. So that's good. Let's get everything all posted up right here and we should be good to go. All right. All right, let me get this link sent out to you guys here. Sorry, guys, my dog's barking. 1 second. All right, it's good. All right. Good afternoon, everybody. I'm gonna send this link out real quick and we'll get started. So get a few more minutes for people to make their way in. It's 2:04 right now, so we're just getting started. Or I'll give it a few more minutes. Still a lot of people making their way in right now, so should be good. Looks like MT4 is still going in and out. Lower my volume a little bit. All right, cool. People are making their win. Some people are sending their profits and stuff. See, so Eunice just sent me some of his profits. Looks like he locked in some pretty good stuff today. Yeah, 375, all wins, no losses right here. Nice work, Eunice. Not sure if you're on the live session, but definitely great work right here as you wrap up the session. Okay, Eunice just said he couldn't make it on. It's okay, Eunice. All right, guys, so I'll give it a few more minutes. It's 2:06 right now. We got about 31 people in the room right now, 32 actually, and I'll let people join their way in. If you guys have any questions, or I mean, obviously you guys are gonna have questions, go ahead and put your questions in the chat and then we can cover whatever you guys want to cover today. So, I mean, this session is meant for you guys, so we'll keep going for as many questions as we have. So if you guys have questions, go ahead and drop your questions. If there's any strategies you want me to cover, any examples you want me to cover, any trades you took, which you probably need some clarification on, let me know, and then we can take a look at whatever you guys want to review today. So, hey Adil, good afternoon. Good afternoon, Professor. Good afternoon, everybody. It's 2:06 right now. People are still making their way in, so I'll give it some more time. But yeah, if you guys do have any questions, feel free to, pop in. Let's see. Professor said, can you cover a trade from this morning? Cover the trade from this morning. Fortunately, took a loss. Sure, Professor. I'll try to go back and look for it. I got to figure out which one was it. I do have a screenshot here, so should be able to pull it up. PC is asking, what is a double wick rejection? Newbie question. A double wick rejection is exactly what it's called, a double wick rejection. So 2 wicks rejecting off the same price point, that'd be a double wick rejection. So let me see if I could find an example for you. But it's exactly what it's called, right? Double wick rejection is a double wick rejection. So I know it's a newbie question and I know some people are still confused by it, but let me see if I can find one here to show you guys. It's probably easier to show you here on a clean chart. And as you guys can see, my markup from this morning played out perfectly. It played out exactly how I marked it up. We got off the live session here. I said price was going to consolidate, probably push up a bit, which it did, consolidate further, and then reject off this point for a full-on mid-market reversal, which is exactly what happened here. So whoever caught it, great work. I did catch some of this move here, just a little bit. I was trying to catch the entire move. I kept getting stopped out in profit. What happened was when it dropped, I entered a sell. As soon as price dropped further down here, I moved my stop loss in profit. And every single time price came up, spiked up, stopped me out, and then came back further. So unfortunately, I didn't get to catch, the entire move here. I was literally trailing it as it came down over here. I think something that I need to work on is probably maybe moving my stop loss and profit a little later. But it was a risky session, so I didn't want to risk it. Made some profit, a couple $100 across all my accounts, but it could have been a lot more if I caught this entire move here, because this actually dropped like 1,000 pips. So that'd have been like a $10,000 profit for me if I was able to hold on to it for the entire move. Unfortunately, only a couple $100, but it is what it is. So, all right, let me find that example for the double wick rejection for PC real quick. Let me go back a little further. So a double wick rejection would be this right here. It's exactly what it's called, a double wick rejection. So we have a wick right there. It's a double wick rejection. So one wick, two wick, that's a double wick, right? It's rejecting off the same price point. This would be considered a double wick rejection. Same with this down here. So this is one example. Another example is going to be over here. Same exact thing. So we have two wicks right there, a double wick. It's rejecting off the same price point right there. That'd be considered a double wick rejection. So let me know if that makes sense to you, PC. If it doesn't, I can probably explain it a little more in detail, but it's pretty self-explanatory because it's exactly what it's called, double wick rejection off the same price point. So, okay, perfect. Yeah, you got it. Awesome. Yeah. So you got it there. I know it's not that difficult, but if it's new to you, you probably don't understand what it means, but there you go. Some people call it tweezers. There's different names for it. I just call it double wick rejection because it makes more sense. Some people like to call it tweezers, but double wick rejection is just, straight up what it is. Next question, let me scroll up real quick. Question from Professor. Professor was asking about the opening trade or the trade that we took during the live. Okay, so the live earlier today, let me see. I'll pull it up right here. So the live came up, or that trade came up at about 7 o'clock. Okay, so let me go back to 7 o'clock over here. Yeah, I'm not sure how you got a loss on that, Professor, because it was like deep in profit. So let me just go over here real quick to entry came. I think it was like right here. So let me just go over. I'm assuming, yeah, it's got to be like right here. Okay, so the entry came right here. We were applying the version 2 of the variation. So basically for the normal variation, it's a double wick rejection. Or it wasn't this actually, it was a different one. Sorry, let me see where it's at. It was right here. Okay. So this is the entry that we took during the live session. I'm not going to put the requirements for the version 2 because we're not teaching that strategy yet, but I'll just show you what we were looking for here. I'm not going to put the requirements because I already know a lot of people are going to mess it up, even though it's really simple. But basically for this variation version 2, we're looking for a high low, right? We're looking for a low, we're looking for a high. Right here we have a high, and then the following candle, we're looking for basically a full body on the top, no wick at all. Normally we look for double wick rejection for this. So basically, let me see if I could probably draw like my own little wick here. They don't have a line tool. Let's see, I know there's a line tool here somewhere. I'll just draw like a little trend line here. Okay, so normally if we're looking for a double wick rejection, we're looking for something like this, right? This is a normal variation. We're looking for a double wick. For the version 2 that we've been applying, we're looking for no wick. So it's basically like a strong reversal candle because there's no wick, like price doesn't push up at all, it just pushes straight down. So for the variation 2 right here, this is a variation 2 entry. Professor, we entered right here, close of this candle. Our TP was at 100 pips. Our stop loss was at 300 pips. So looking at this right here, you can see price comes down. It hits our TP. Some people didn't get pulled out right there, and some people held on to it, like myself. I didn't get pulled out right away. So I was still in this position for a while here. It came down and it was straight to TP. So I'm not sure why you got stopped out, Professor. It might have been because of your spread, but I mean, that'd be the only issue here, right? Because it's impossible for you to lose this trade unless it was for your spread on this initial move, or if you entered too late. So a couple of things that could have happened was your spread causing you to enter at a lower price, or your spread after entering causing your stop loss to be too close. I mean, it's literally impossible for you to have lost this if your spread was okay. So the main thing that I can kind of probably decipher out of how you would have lost this trade was due to the spread, because this went way farther down. So looks like if you entered at a wrong price, or I mean, if you entered too late or your spread was too wide, when it pulled up right here, you might have gone stopped out, possibly. That's the only explanation that I can really give you. I'm not sure which broker you're trading on, if you're FTMO or MFF. I know MFF has some really wide spreads, but I mean, there's a gap right here of like 50 pips. So unless your spread was like super wide, like over 50 pips, then maybe you would have gone kicked out. But I know FTMO wasn't at that point. So I think majority of people didn't get stopped out of the trade. Majority of people they survived the pullback right there. For me, I personally moved my stop loss a little higher because I was getting worried that due to the spread, because I did see the MFF spread, but I was trading my main account on FTMO, so it didn't trigger mine at all. It went straight to profit. So, gotcha. Yeah. So you said that you were using FTMO. Yeah, I don't know. It's weird. I'm not sure like what happened with yours, Professor. Yeah, because B said B entered and was negative 1.6K instantly. So the spread looks like the spread was pretty wide. Yeah, B said the spread was disgusting today. B, are you using FTMO or using MFF? Because I know the spread on MFF was okay. So B was on FTMO as well. So for FTMO, I guess the spread, if he got in at negative 1.6, but you actually made profit off it, right, B? So my only thing here is that what could have happened here for the most part, Professor, is you probably just entered late. You probably entered when price was down here while everyone entered at the actual price. Let's see. So Professor's asking what was my entry. Trying to figure out what my entry was. What trade was that? This one right here. My entry was 36,240.45. So I got in at 36,240.45 for that trade right there. I believe so. Yeah, it looks like that was the one's first trade from today. So I got in at that, but your price isn't going to match the trading view over here. So you probably got, what was your price, Professor? My guess is that you got in like a lot later than us. 36,236. Yeah, you got in way before. So you got in at about 150 pips too late. So you're already 150 pips below where we got in from. So you got in like at the bottom right here. Because I got in like right at price. Oh, gotcha. Okay. Yeah, so John got stopped out too, but he made it back right after. So it looks like the people who got stopped out, they just entered too late, or it doesn't look like it was a spread issue because I got in at good price, but it looks like some people got in a little too late. I know that trade did come in pretty quick, so you had to be watching it. And if you waited for like split second too late, you probably would have gotten caught as it dropped below here. So let me just go back over here real quick, Professor. Yeah, because the thing is, if you didn't get in right away, you probably got in like literally at the bottom when it was at TP. So you got in already at like 100 pips after everybody got in. Yeah, no, I see. Yeah, no, it did move quick, Professor. So if you go back and watch the session, price moved really quickly. It as soon as this candle closed, price dropped, and then it came up and it pulled back and then it came right back down. So, I mean, sometimes things like that happen. I think that plus the spread, looks like you probably like literally just got triggered because this right here, price was about, yeah, 50 pips. So the thing is, if you got in like down here, Professor, let me just move this down. Yeah, if you got in down here, you probably would have gone stopped out, right? So it looks like you probably got in just a little too late, right below there. Yeah, I know it is frustrating, Professor. I know it's unfortunate. It happens sometimes. So it's gonna be like, so what I would have said was to just wait for it to pull back. I don't know if you like fumbled into the trade a little later after we were already in it. But if this happens where price pulls down and then shoots right back up, I would just wait and get in for a discount up here, right? Because I think what might have happened is we entered the trade and then you probably entered like a split second or a couple of seconds after us, and then as soon as you entered, it was already down here. I know it's frustrating, but I mean, it happens, right? If that becomes the case, then in a lot of instances, yeah, I know. In a lot of instances, you might want to have. That's why for me, if you guys remember during the live session, when I got in right here, I was worried because of the spread. So I moved my stop loss a little higher, just a little higher, like above this line right here, so that I could have that space. But I mean, I tried to, but I didn't. It didn't end up filling because it was so close to it. Like what happened was when price was around this area, I tried to move my stop loss, and what happened was price was too close, so it gave me an error, and I couldn't move the stop loss. Thankfully, it came down right after, and then it went straight to our TP. But yeah, I mean, it's unfortunate. You were just off by like a split second with, I guess, like you and John, but majority of people, they were able to withstand the move. So, I mean, it's all right, Fresher. At least you understand that like it was just a technical issue. It wasn't necessarily a mistake on your part. It was just a technical issue. Price was too volatile, and yeah, it wasn't strategy. So it's okay. I mean, at least you know that it wasn't your fault. And it wasn't strategy's fault. It was just the market. And a lot of people had issues with MT4 today where it was logging on and logging off. So good thing that we didn't lose connection during that time. Because if we did, we probably would have gone screwed, because you can see right after price hit TP right here, it came right back up. So thankfully, we were able to get in and out of this position. But yeah, market was pretty crazy today. You know, it happens every once in a while where volatility gets really crazy like this, because this range right here was pretty wide. You know, if you just measure this point right here, it was ranging like 800 pips. So if our stop loss is like 300 pips, you know, it's easy to hit your TP and easy to hit your stop loss right away. So, yeah. All right, cool. Other than that, guys, let me scroll up real quick. All right, so I'm done with Professor's question. I'm gonna go back up to the top and I'm gonna go to the next question on the list. So let's see what we got next. SS is asking, hi, can you go over the high, low, and variation? Sure. So, or actually, sorry, let me go up real quick. Adil is asking, before taking trades on the 1 minute, do we need to look at the 3-minute, 5-minute, 10-minute pivots? I mean, if you want to be sure and certain, then yeah, Adil. I mean, there's a whole process that we use. I'm sure you've been on the live sessions. We look at the same thing every single day. We look at retail sentiment. We look at fundamentals. I mean, there's a whole step-by-step process that we do. You know, so I mean, depending on how confident you want to be about your position, you can't just be blindly taking trades, right? I try to remind everybody that every day. So the thing is, if you want to take quality trades, you have to, you know, check everything. If you're just going off the strategy by itself, odds are it'll probably work, but you're not going to have like quality entries. You're just going to have, you know, entries. So, I mean, you don't need to, you know, people always ask like if you need to. You don't need to do anything. Like literally, you can just go off the strategy. But if you want to be an actual, you know, consistent trader, you have to. Trading is not that easy, right? If it was that easy, everyone would do great. So for me, I wouldn't say you needed to, but if you wanted to, you would look at retail sentiment, you would look at fundamentals, and then you would look at technicals, right? It's a step-by-step process. Retail sentiment, fundamentals, technicals are going to be when you look at the pivots. So what you're referring to here is a pivots, which is the last confluence. It's probably the least the least strongest confluence because price is going to bounce around them. We're on the shorter time frame, so it's not as necessary, but it's still one of the confluences. So if all the confluences line up, say you have, say that you have your retail sentiment is short, your fundamentals are bullish. I know they're not bullish here, but I'm saying if they were bullish and price was above the pivots on the 1 minute, 3 minute, 5 minute, obviously, where's price probably going to go? It's probably going to go up, right? So if you combine all those confluences together, then you'll have a better understanding as to where price is going. If you're just entering off basic strategy, you're not going to have such confidence because you're kind of just flipping the coin, right? You're flipping the coin whether price is going to go in that direction or not. So what I would recommend, Adil, first thing you should look at is always going to be retail sentiment. This is going to be number one. Number two, you're going to look at fundamentals. The technicals aren't going to be as important, but yeah, they'll give you extra confidence. So you don't necessarily need to look at it, but it would be a good thing for you to look at it. You guys just want to make sure that you're doing exactly what I'm doing, right? If you guys want to be as consistent and as successful as, you know, the best traders here in K2, you guys got to be consistent. You can't take shortcuts. You got to look at everything. So, yep, no problem, Ideal. You know, I just don't want to tell you guys that it's necessary, like it's required when it's not. But for me, it's required. For you guys, it might not be. It just depends on how riskier you guys want to be with your trades. So there we go. Other than that, let me scroll up real quick and see what we have next. So the next question is from SS. SS wants me to take a look at the high, low, and the variation. So we'll start off first with the high, low. So here's a high, low strategy. Let me see if there's one that an example that I can find here that came up recently. The thing with this, I'll show you guys like the basics of the high-low strategy, but you guys have to remember that there's you have to go back and look at the confluences before you take any of these trades here. The thing with this strategy is that you don't necessarily need to look at the pivots, just like what I was telling Adil over here. So I'll show you one where the pivots don't really matter because in a lot of instances, you'll see price come back down. Let me see, 1, 2, 3, 4. Actually, this isn't an entry, so we'll skip that. It's kind of hard to show you an example for today's market because it was very choppy. There's actually like no high-low entries during the live session today. Nothing there. Let me see if I can find one. See, the thing with this strategy here is that we usually apply it from 6 to 8. So, I mean, I could look for entries here, but it's probably not going to be as solid. So here's one example here. I'll just show you this. I'm just showing you guys as an example so that you guys can see. This doesn't necessarily mean that it's one that I would take, especially today, because today we had, or actually the bias changed. We had a bullish bias in the beginning. And then as we got off the live session, we saw that the bias was starting to shift to the downside. So, you know, maybe this would have been an okay entry, but I generally don't trade after 8. So this isn't one that I would take. However, it does still hit. So, okay, here's a high-low strategy. The first requirement is you confirm the previous swing high and swing low. 5 candles must pass to establish. So for example, right here, this would be the previous swing low, and this would be the previous swing high. The reason why I'm not calling this the previous swing high is because it hasn't been established yet, right? So requirement here, 5 candles must pass to establish. So right here is just 2 candles. So even though there's a pending high right here, this hasn't been established. I'm not calling this the previous high. This would be the previous high because there's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles that pass it, and it hasn't touched this price. So this is considered the previous high. This right here would be the previous low. And the reason for that's because if you count forward 1, 2, 3, 4, 5, that's the requirement right there. So 5 candles have passed, price hasn't broken this low. This is the high and this is the low. So the second requirement is that you confirm price breaking close past the previous swing. So right here, we're looking for a sell, obviously, because we have a sell momentum right here. Price breaks and closes below it with this candle. So with that said, we have requirement number 1, we confirm the previous swing low. Requirement number 2, we confirm the price breaking close past the previous swing, which would be right here. This candle right here breaks and closes below it. So the first two requirements have been met. The third requirement, you want to confirm that you're trading in the direction momentum using the K2 momentum indicator. We already identified that here. We have a sell signal, so we're only looking for sells. Fourth requirement, you want to confirm that price is not ranging or consolidating. You can see within this area, price was ranging because price came up, came down, came up, came back down, but it broke outside of the range. So it's no longer in a range. So requirements 1, 2, 3, and 4 have been met. Lastly, you just want to confirm that price has not touched the previous swing before the break and close. So price broke and close this swing right here, none of the candles before it touched it, right? So the fifth requirement has been met. After that, you'll enter on the open of the falling candle, which would be right here. Your TP stop loss will be 300 pips or 100 pips for your TP, 300 pips for your stop loss. We just want that cushion there. Every time we enter these trades, guys, we don't anticipate on losing. These trades almost never lose, especially if you're using the triple confluence that we've been using on the live session, or even without it. I mean, like for example, right here, this isn't a triple confluence. This is only this strategy by itself. The triple confluence would require that we have a momentum signal on this entry, but we don't. So this alone by itself, we let it run, and there you go, full TP. So this would be the high-low strategy. The variation, let me see if I can find an example for the variation. Variation would be, so this is the high-low. Let me see SS if you got that. So SS, if you're still here, if you want to confirm that you understand that, that'll be good. We'll move on to the variation right after. If I don't get a response from you, I'll just move right on to it. Okay, perfect. So you got the high-low right there. Now I'm going to show you a variation. For the variation, we're looking for something a bit different. So I see an example right over here. So guys, I'm not using the confluences here, right? Because this isn't real time. So I can't show you the confluences like I do on the live session. The market is closed right now, so there's not going to be any updates, but you guys can use this information to include the confluences when you guys actually trade during the live session. So we'll go over here real quick. Here's the variation. The variation is a lot more simpler. It's very simple, but you guys want to make sure that you guys don't take any shortcuts, because I see a lot of people take shortcuts. This strategy requires literally 2 requirements, and for some reason people still want to take a shortcut on this. So looking at this right here, you can see that the first requirement is to confirm the high-low using the K2 high-low indicator. We have a high here, we have a low right here, right? This is using the K2 high-low indicator. So you're identifying where the high and the low is. It doesn't have to be established. You just need to establish that there's a high-low using the K2 indicator. A lot of people try to use this strategy without the indicator, and I don't recommend it, because the indicator is always going to be, a step ahead of like what you guys are thinking. Because I see a lot of people sometimes, they'll send me a screenshot and they'll be like, hey, there's no entry here. And I'm like, yeah, because there's no high-low there. Like this looks like a low, but there's no high-low there, right? I see a lot of people send me stuff and they try to do stuff on their own. Like for example, right here, a lot of people identify these as lows, right? Because they think, oh, price comes up, swings back down. But this is just noise. You guys got to remember you're trading on the 1 minute. So this indicator is very useful, and I wouldn't say it's required, but if you want those quality high lows, this indicator is going to make a huge difference for you. So looking at this right here, we have the low. Second requirement, you want to confirm that the candle following the high low is a double wick rejection. Pretty much what we covered earlier. Right here, you have 2 wicks. It's a double wick rejection off the same price. So after that, you would enter this for a buy. As soon as that candle closes, and then you'll let it run, and there you go, full TP. There's an example of the variation. So hopefully that makes sense to you guys. SS, if you want to confirm that makes sense, or if you need another example, let me know. Otherwise, I'll wait for you to confirm, and then we'll move on to the next one. All right, cool, perfect. So there you go, guys. So there's the example of the high-low, an example of the variation. other than that, that is about it for those. Let me go to the next question. So let me scroll back up, see what's next. All right, so Randy wants me to take a look at the 3-minute scalp at 11:21 a.m. So let's go take a look at that. Go to the 3-minute over here. All right, so let's see. Randy said 11:21 a.m. And I'm assuming you're talking about Pacific time, right? So you're talking about this one right here. So this one at 11:21, it's going to be hard for me to confirm like what the fundamentals were at the time. I know the retail sentiment was still bullish, so that's probably one red flag right there to take a sell, especially on the 3 minutes. So for one, we have this right here, which is already a red flag. You shouldn't be taking any sells in this instance. I mean, you can take sells, but you're going over the main confluence here, right? This is going to be confluence number one. If the sentiment is short, you know, generally you don't want to trade with everyone else. I mean, yeah, if the sentiment's short, you definitely don't want to be taking any sells. I don't know what the fundamentals were at the time. I mean, this is at close. So here, let me see. I'll see if I can go back real quick and see where price currently is. So price is currently down here. So, I mean, I don't know if you guys knew what the fundamentals were at this time, but just refresh this. Yeah, I mean, the futures data isn't really going to give us much information here because we'd have to see what was going on around that time. One main thing that I wouldn't be doing at that specific time at 11 is, for the most part, be trading because it gets close to market close. Let me see if there's anything else right here. Here, let me just analyze it and I'll see what I can see, what I can pull from this here if I can find anything. Because I was looking for sells right here too. So don't get me wrong, I was looking for sells even though not at this specific time, but I was looking for sells around like this point over here at like 10. So maybe like an hour before you were looking for this trade right here. Randy. So here, let me just go back and see. See 11:21. So was priced here on the 1 minute at 11:21. So I think one of the reasons why I probably wouldn't be looking for entries right there is the fact that price was in consolidation. Because you guys have seen during a live session, I'm generally drawing up my zones over here. So let me just draw the zones that we would have had up at the time, because I usually base a lot of my entries off the 1 minute. So just looking at this right here, one of the main reasons why I probably wouldn't be looking at trades at this point, because you can see right here at 10, I was looking for trades because price was actually moving. But right here at 11:21, price was in some consolidation. So let me just take these off right here. And as you can see from a clean chart, price is like literally consolidating within this point. So at the time of this entry, and this is why I always recommend that you guys, you know, take a full analysis of the chart, not just like on whatever chart you guys are looking at. Because the thing is, on the 3 minute right here, it might not look like price was in consolidation, but if you go to the 1 minute, it was clearly in consolidation right here. So that probably would have been one of the red flags for me. You know, if you guys look at my analysis each morning, I'm always on the 1 minute because the 1 minute gives you the more detailed look as to where price is going. On the 3 minute over here, I mean, if you were to draw the lines here, even for the high lows, you would still see that it was in consolidation. And you guys have seen, like, whenever price is in consolidation like this, I generally don't enter trades. One thing that I remember I was talking to Patricia about, once it hit right here, 11:09, I wasn't even looking for any more trades because you guys can see the huge wick right here, right, for this candle. So when this came up earlier, because I was looking for trades between 10 and 11, when me and Patricia saw this, we're like, oh, we're not going to trade anymore because this gave us, you know, a red flag that price is probably going to start moving weird. But looking over here, this is why it's important that you guys draw these high lows. And this is why I always draw them up so that you guys can see when price is in consolidation in this area. So drawing this right here, Andy, you can kind of see price was literally consolidating within this area, right? So if price was consolidating within this area, we generally are waiting for price to break to the upside or break to the downside, right? So if you would have taken that trade right there, odds of reversing on you are really high because it was right at that low. And I think that's pretty much what happened. Yeah, price reversed all the way up. So, I mean, I know this isn't something that I always emphasize in the market, like when I'm analyzing, but I always draw the high lows in here just to give you guys a better understanding as to where price is. Because one thing that you guys don't want to be trading in is when price is consolidating. We want price to consolidate, but when price is consolidating, you want to wait for it to break outside of it, right? So for example, here, if you're waiting for price to break outside of here, there's probably no entry here, obviously, but if you're applying like the high-low strategy on here, what we'd be waiting for is for price to break outside of the consolidation. So like if you waited for this to break outside here, and then you took this for a buy instead, looks like you probably would have hit TP. So there's always going to be different things that you guys can use. So I'll try to give you guys a checklist. So for one, we want to look at retail sentiment. This is always going to be number one. For two, you want to look at fundamentals over here. Three, you want to look at technicals. And then with technicals, this whole identifying the high lows to identify if price is consolidating is going to be one of those factors, right? So there's going to be like three big things that I look at: retail sentiment, fundamentals, and technicals. Within technicals, there's a lot of different things that you guys can bunch in together, right? You can bunch the trend using the K2 pivots. You can bunch the trend using the K2 trend meter. You can bunch the momentum indicator to see where momentum is going on multiple timeframes. But I think one of the main things that I would recommend for technical analysis is to identify if price is consolidating. Because when price is consolidating, you're either going to get a range within this area. And when it is ranging, you want to make sure price breaks outside of it, right? That's always what we look for. If you watch all my live sessions, I'm always referring to consolidation. I'm like, okay, price is broken out within this area. We're waiting for it to consolidate. So when it breaks below, we can take a sell. Vice versa, price is consolidating here, waiting for it to break above, so we can take a buy, right? So I know it's not stuff that I necessarily point out, but it's stuff that if you trade and you trade the same way almost every day, you'll start to it'll be second nature to you. So that's one thing that I would recommend, Randy. So, I mean, unfortunately, sorry that you lost that trade. I feel bad that you took that trade because I was actually trading during that time too with Maddie and Patricia. We weren't on the live, but we were just kind of discussing because Patricia was taking sells. I think she even posted her profits here in the group. Yeah, she did. So she took the sell right there. She took she took a little more at 11. See, she took the trade at 11:04, Randy. So literally we were trading up until that time, and you literally took it when we stopped trading. One thing that you guys want to look out for in the market too is like unusual spikes in price, right? So like, for example, here, we were all trading around this area until like 11. So price is just moving smoothly, going back and forth, et cetera, et cetera. And then all of a sudden, we just see this huge spike. I think it was like right there. So this candle right here, once it got to like 11:10, we're like, oh, we're not going to trade anymore because it's like, it spiked big right there. So when it spikes big like that, you're probably going to see some weird movement. So we were literally looking for sells right here. This is where I was trying to catch the reversal. So this whole area right here, I was trading up until like close to 11. I wasn't really trading, I was watching the market. So I was entering trades and trying to catch it as it dropped. And then as soon as it hit 11, I was like, all right, never mind. But yeah, this big spike right here caused us to want to just stop trading during the session. So just another thing to add to your confluences, Randy, when you guys are looking for trades. But definitely when you guys are looking at technicals, always make sure that price isn't consolidating. That's gonna be one of the main things. That's why we created the initial SR indicator. So if you guys remember the first SR indicator, we had this one here. So for the older members here in K2, you guys remember the SR indicator. We usually would not want to be trading when price was consolidating. Obviously, it doesn't look like it's consolidating there, but you can see right here from this point, it's in consolidation. So, I mean, the high lows have always been, and consolidation has always been something that we looked at. It's just not something that a lot of people put too much importance on. But yeah, so hopefully that helps with my analysis right there. Randy, and no, I mean, it's a learning process for everybody. So, don't feel discouraged that you took that loss there. It's all right, because you're going to bounce back. It's not a big deal. So other than that, let me scroll up and see what we have next. Yep, no problem, Randy. Glad I could help you with that. Let me scroll up and see what else did I miss here. Ideal say, can we adjust stop loss to 500 points if necessary? Cause of pullbacks, spikes can easily hit. Yeah, definitely ideal. If you were to do that though, what I would recommend is to lower your lot size, because you're going to increase your risk if you go for 500 pips. So, I mean, depending on what your lot size is, if it's too big, you might get close to your daily loss limit. For me, I use a 10 lot. So me using a 10 lot, I'll break down. So if I'm on a 200K count, right? 200K FTMO. My daily loss limit is 10K, right? So if I'm using a 10 lot with a 300 pip stop loss, I have a $3,000 risk. 10 lot with 500 pip stop loss, I have a $5,000 risk. So for me, I can still use I can use a 500 pip stop loss if I wanted to, because I'm still within my daily loss limit. Thing is, I don't plan on losing any of my trades. So even if I was to take a loss on the 500 pip, I'd still be perfectly fine, because I'm still within my daily loss limit. So depending on your account size, you could use a 500 pip stop loss, but if your lot size is too big, you might want to lower it. So it's a yes and no. It's a yes because we don't plan on losing the trade, but sometimes you might get, price will wake up and then get close to your stop loss where you want to move your stop loss a little bit higher. But you just don't want to do that if your lot size is too big. So it works, but obviously you want to be careful with your risk, and you want to manage your risk properly. So, all right, done with that question. Let me scroll up real quick. See. All right, next question is from Emil. So Emil's asking, I watched one of your first videos explaining the breakout strategy on the 1 hour. So Emil, we never traded on the 1 hour. I'm not sure which one you're referring to. Let me see, Emil, are you here right now? Let me see. Yeah, Emil, you are here. Emil's on. So if you can confirm, because we don't have any breakout strategy on the 1 hour. We do it on the 1 minute. I'm trying to figure out which one are you referring to. Wait for Milzon to respond. Milzon, if you can respond. One of the first videos, I'm trying to figure out which one you're referring to on YouTube. So the first video on YouTube is going to be the live session from today. So I'm trying to figure out what are you talking about. Let's see. First video on YouTube, because we don't trade on the 1 hour, so I'm not sure which one are you referring to on there. So I'm here on the YouTube right now, Million. I'm trying to see which one you're looking for, because we never trade on the 1 hour. I haven't traded on the 1 hour ever with K2. So I'm trying to figure out which one you're referring to. We've traded on the 4 hour, which is a K2 SR zone strategy. So the first videos on here are all from a year ago. I'm trying to see, you said it's 2 years ago, but there's no videos here from 2 years ago. Unless you're talking about one of these over here. But I mean, you were probably talking about the original intraday strategy, which yes, you can use it on the, you can use it on whatever time frame you want. But yeah, because you said it was a breakout strategy. I don't have any, the only breakout strategy we have is on the 1 minute. So I mean, if you can find the video Millie's on, I can probably go over it, but I don't know which one you're talking about, because I don't think I have any videos here that go over trades on the 1 hour, unless anyone here in K2 can confirm that, because I created the strategy, so I would know if there's one on the 1 hour, but I don't even, I honestly, I can't tell. Let me see the videos here real quick. So if you look 2 years ago, I mean, there's a lot of videos here. I'd have to go back pretty far. Yeah, Randy said, I've never seen anything for the 1 hour, 4 hour, maybe FX. Yeah, because I don't know anything here. So Milzan, if you can confirm which strategy you're talking about, I can go over it. You know, because I created all the strategies on here, so I can go over it. I can tell you if it still works, or, I mean, everything here still works. Nothing here doesn't work. It's just, yeah, if you can confirm which one that was, I can help you with it. Okay, let me see. Sent me the video here. So this isn't a K2 strategy. This is just a breakout. It's like, this is just something that's like basic. It's not something that we use. It's not a K2 strategy. It's just something that was taught to give people like a little intro into like what kind of strategies they can learn. But this isn't a K2 strategy. It's just the moving average breakout strategy. This isn't one that's actually, this one was like for the public in Milzan. So I wouldn't use any of these here. This was just something that was put out. This is something that I used like a long time ago. I mean, you can back test it, but it's not a K2 strategy. It's just one that I've used. This is something that I learned from someone a long time ago when I first started trading. So I wouldn't go over any of the videos on the YouTube. These are really old. Like this, I couldn't even remember. I mean, it does work, but it's not one that I teach or one that I recommend anyone use. So you can go and back test it to see if it works, but this wouldn't be considered like an actual K2 strategy. Like you can find this moving average breakout strategy anywhere. It's just a really basic strategy. Because what I was doing initially with K2 a long time ago was this was before I even came up with the K2 indicators. Like, let me see if I could even, because we didn't even have the indicators back then. So let me see if I could even pull up this video. Yeah, so for this right here, you can see that there's not even any K2 indicators here. This is just a basic moving average, Ichimoku, and a high-low indicator. Like these are like very basic stuff here, but this doesn't use anything that's related to K2. This was before K2 was even K2. This was just trading. So you can backtest it if you want, but this is probably not going to be a very accurate strategy because this doesn't use anything proprietary, right? This is something that everybody else is using. And the way that we trade now is we trade opposite of everybody else. So you don't really want to be trading how everyone else is trading. You want to do something opposite. So yeah, sorry for the confusion there. But yeah, this is it's just a normal strategy. Don't get me wrong, it works, but it's not one that I would recommend you use anymore. All right, so let me scroll back up and see what else we got over here. Man, that's an old video. I'm surprised you went that far back to find that video. Yeah, that's crazy. That was before I even created the indicators. Let's see. Yeah, so for this one right here, Milzan, this one is the intraday strategy. So yes, you can use this one, but this is even before the trend meter was even created. So now you can use the trend meter. You don't need the Ichimoku cloud anymore. So you can still use this one, but I wouldn't recommend using the older one. So if you want to use this one, yeah, this one works perfectly fine. It's just, you definitely want to use the other indicators because back then we only had one indicator. It was literally just a momentum indicator. You can see we don't have like anything on here. It's just one. But now that you have these other tools, you can use this, plus you can use the K2 trend meter, plus you can use the high lows, plus there's like so many different things that you can use. That's going to be the very bare basic way to apply the strategy. But now you want to use all these other confluence that you have so that you can, you know, almost guarantee your win. Because the more confluences you have, the better odds you have of winning the trade. But yeah, that strategy works perfectly fine. Like I could even show you on here. I don't know if there's something that you like to trade specifically. Like, you know, if you wanted to trade US 30, let me just take off the pivots here, and you want to use the bare basic strategy. You know, you match up a valid momentum signal with a trend meter. If you were to take that there, you know, full TP, right? If you want to trade it on, okay, so you like odd JPY, delete everything on here. You know, you're applying this on odd JPY, you have a valid buy signal, you have a green trend meter right here. If you were to take that there, full TP, it still works. It's just, I don't trade Forex anymore because it just takes forever. I don't like trading, I don't like being on the charts forever. I just want to get my profits and get out. So as you can see right here, the strategy still works perfectly fine if you would like to use it. You know, just because I don't use the strategies anymore doesn't mean that they don't work. It's just that I don't like waiting on the chart for hours to make my profit. I'd rather just be on the chart for an hour a day and make my profit from there. So it still works fine. You can go back and back test it as much as you like. So yeah, Milzon's asking, what would my stop loss be? So there's different ways of doing it. If you watch the videos in the course, there is one way to do it where, so say for example, you were taking this right here. There's a couple different options that you have. If you want to do the lazy way, which is what I used to do, I probably wouldn't do the lazy way in the 1 hour because it's a big, you know, it's a big move depending on how big your TP stop loss would be. But if you do want to do it on here, you would just click this reset chart. So it shows the entire chart. You use a long tool and then you just place it right there. That's one way to do it. So if you're to do that, you let it run, full TP, right? That's one way of doing it. Another way of doing it, the not so lazy way, is you can place it at the previous swing. So depending on where the swing's at, so if, again, for example, if you're going to enter this here, you have a valid buy signal, valid K2 trend meter. You would place that right there and then put your stop loss at the previous swing. I like using whole numbers. So right here, it's at about 24 pips. I'd probably round it down to like 30. So there's space there. Because one thing that you want to keep in mind, so I see a lot of people intermingling like Forex with indices. With Forex, you have a really wide spread, right? Your spread for this is going to be like 10 pips. So you want to have some space in between because when you enter this trade, you're going to have, you know, you're going to have a negative entry. When you're on indices, it moves so fast that the spread's kind of tight. So if you were to put this here and your spread's like 10 pips, you would literally be entering at a loss. So you'd be entering over here for like 10 pips. And if your stop loss is right here, it's already too close, right? So you wouldn't have it that tight. So that's something that you want to keep in mind. If you're going to enter this trade, you want to put it at the previous swing, but add some space there for the spread. So instead of putting it at 24 pips, I'd probably put it at like 30 pips, which should be right there, 30 pips. And then you let the trade run and same thing, full TP, right? Either way it works. I mean, it just depends on where you want to put it. If this is too tight for you and you like having a lot more space, because, you know, some people just don't like having, you know, their stop loss too tight, then you can place it at the next swing. So, you know, identifying swings are subjective. Good thing for you is that we have the high-low indicator now. So you can put it this swing or you can put it the swing down here, which would be about 88 pips. Like I said, I like using whole numbers. You can put it at 90 pips. You let that run, and there you go, full TP. So there's different ways to do it. You can place it at the previous swing. The next previous swing, you can do the lazy way, like I just mentioned earlier. You'll just go back to where your entry point would be. Close that. Zoom out so you have the entire chart. Just let TradingView do it for you. And they automatically place your TP stop loss, which is about 73 pips. Basically what it does is it uses the swing and then it adds like the ATR, which is the average true range, to give you like a pretty solid range for you to be trading within. So if you were to use TradingView's recommendation, it works perfectly fine. If you wanted to put it at the previous swing down here for 90 pips, it'd still be fine. If you wanted to be safer and have your stop loss a lot tighter, right here at 30 pips, either way, it'd still be fine. So there's different ways of doing it depending on your risk. You know, if you want to hold a trade longer, then use a bigger stop loss at the previous swing, or if you want to have even bigger at the next previous swing. But it's really up to preference. Everybody trades differently. So for me personally, like I mentioned, I don't like being in the trades too long. So I try to get in and out right away. So I'd probably put it down here at this swing, have that little space right there, but I'll go for a bigger lot size. So I would still make the same profit right here than I would make if I was going for double that, right? For 60 pips. So everyone's different. What I would recommend is, you know, you figure out what you like. Are you okay with higher risk, smaller moves? Are you okay with lesser risk, bigger moves? You know, whatever works for you, use what works best for you. Because the last thing you want to do is stress yourself out, forcing yourself to learn a way to trade that doesn't fit you. So I know that I scalp a lot. It fits me. It doesn't work for everybody because a lot of people get stressed out. They get anxiety from the high risk. But I like the high risk, you know. It's like risk big, win big. So I just, you know, it depends on how you want to trade it. So does that help you out, Emilizon? I just want to make sure that, you know, everything there is covered for you so that you can move along with it. Awesome. Okay, great. So that goes on with your question right there. Let's move on to the next one. Let me scroll up real quick. Let's see. All right, Wilson's right there. Let's see. So Nihad's asking, do we enter the variation trade with market order once the variation candle concludes, or limit order with the candle close of the variation candle? You'd want to enter with market, Nihad, because if you enter with a limit order, you're going to miss the move. I mean, you can enter with limit order, but I don't recommend it, because if you're scalping, you know, you have a split second before you can, you know, get into the trade. Kind of similar to what happened with Professor over here. You know, unfortunately, he got in like a split second late, and he didn't catch the move. So I always enter market. I don't use any limit orders. The only time I use a stop order is if I'm entering late, which rarely happens. It only happens sometimes. If I know the market's moving kind of weird, then yeah, I'll probably like wait for it to pull back a bit and then I'll enter it. But for the most part, I'm always entering market because we're using the depth market tool. So in order for me to enter that, I got to enter right away, and then it automatically sets my TP, my stop loss. Like, you know, Joshua knows what's up with that DOM tool. It helps a lot with you know, setting your TP and stop loss. So I mean, it just depends on like how you want to do it as well, Nihad. Like just how I mentioned before, it depends on your preference, right? If you're going to be scalping, I would recommend entering market because you don't want to miss the move. If you're entering intraday, like on the 30-minute or 1 hour, then you can use a limit order because price is going to move a lot slower, and you're going to have a lot of opportunities to enter at a later time. But for scalping, you got to get in and out really quick. So I'd recommend using market. Yeah, Randy said Dom is a lifesaver. Yeah, definitely, Josh. Josh said Dom is awesome. Yeah, no, I agree. It's like one of my favorite tools. You know, big thanks to Sisuk. I don't think he's on here right now, but he's the one that actually told me about it. He's one of the K2 admins. Yeah, no, definitely. You guys could all thank Sisuk for that because he's the one that came up with it. And you guys have seen Sisuk, like he posts like crazy profits. And I was wondered, like, I was like, how does he take like 100 trades? Because this guy would take like 100 trades a day. And I'm like, how does he take so many trades? Like, look, he's taking like 10 trades, but he's using the DOM. Before, Sisuk used to take like, and if you go back super far, Sisuk would take like 50 trades a day. And I'm like, how does he do that? It's so fast. Yeah, you got to go back pretty far to seize. Yeah, like every day he's taking like 10 trades. I'm like, how do you do that? And he would tell me about the DOM tool, and I never knew what he was talking about until I actually did it myself. But if you guys have been in K2 for a while, you guys will see that Sisuk, he's one of the oldest members here, him along with Patricia. I mean, you guys will see who's been in K2 for a long time. Patricia's been in K2, like, I think before K2 was even a company. Like, we were just trading. We met, I think she just joined my free trading room a long time ago. But yeah, you'll see, if you ever see Sisuk's profits, he's posting up like, you know, 10, 20, 30 trades a day because he was using the DOM. And when he finally explained it to me, I showed you guys, and then now we're all using it. So Super, super useful. All right, let me scroll up real quick and then I will see what is next. So next question over here is from, scrolling down a little bit. Let me widen this chat thing. Melzon's asking, what's the name of the yellow high-low indicator on your screen? So that's a built-in indicator in Melzon. So just go to indicators over here, go to built-in. It's one of the trading view indicators. Just type in pivots. So it's this one right here. It's the pivot points high-low. I think they changed the color. It's not yellow anymore. Okay, so they updated it. This is what the old one looked like, the yellow, and they've changed it over here just a little bit. This is what the new one looks like. You can see the number above it. They just kind of edited it so you can make changes to it. I mean, if you want to change the color, you can always change it to yellow if you really wanted to. I mean, I guess they just did that so you can customize it for however you would like. But yeah, the old one is this right here. It's just one of the built-in ones from TradingView. So we have the old one, so I have small numbers there, but you can adjust it, the size and stuff like that, I think. All right. Let me scroll down further. Alan said, would you have taken the reversal at 36,321, which is before the one you just discussed? Sorry, Alan, let me go back to that again. Let's see. So Alan, if you can, maybe I can just look it up. So we were looking here on 11. 11. Sorry, Alan, I'm like so confused. Let's see, 36,321. Okay, so you're talking about this. I think you're talking about this variation right here, right? I don't know if this is the one you're talking about, but sorry. Yeah, Alan, if you're still here, if you can give me a little more details about that trade, I can look it up. I'm just not sure which one you're talking about. Let's see. Yeah, sorry, Alan, because we had a lot of messages, so I was like, I totally overlooked. It was just, yeah, which one did I explain now? Because I went over like a bunch of different explanations before, so I'm not sure. Are you talking about the US 30 on the 1 minute, the US 30 on the 3 minute, or the odd JPY I was looking at earlier? The 1 minute, okay. Do you have a time for that? Because there's a lot of different entries here. I think you were talking about the example that I was using earlier, right? Which was, sorry, I have no idea where it's at. I don't know if anyone here knows what Alan's referring to. Because there's a lot of different entries here that came up sort of. I'm assuming you're probably thinking about either this one right here or this one right here. I mean, there's a lot of reversals here. Yeah, Alan, if you could like give me a specific time, I can just pull it up. But other than that, there's a lot of reversals. There's one right here. There's one right here. There's one right here. There's a lot of them. Or if you can tell me which strategy you're talking about, Alan, then I can probably figure out what you're talking about, because there's a lot of variations here. There's a lot of high lows here. Yeah, if you guys have questions, just make sure to put like what strategy you guys are talking about, and a timestamp would be better than a price, because I know you gave a price earlier, but there's a lot of entries right here that run that same price point. So I guess I'll let you like look for that, Alan. If you can find a specific time, just give me like the time, like 11:10 or 11 whatever, and then I'll take a look at it. But I guess simple answer to your question would be, if there's an entry using a strategy, then yeah. If you're just talking about a random reversal, then obviously no, because I don't enter random trades. Only if there was an actual entry there using one of the strategies. So if there was an entry there that was following the strategies and it followed the confluences, then yes, I would have taken the trade. So Guys, a lot of people always ask me if I would take a trade or not. And a simple way for you guys to know the answer to that is whether the confluences meet, right? Because I don't take dumb trades. I don't take risky trades. I don't take any random trades. I don't take any dumb trades. If I'm taking a trade, my confluences all line up, right? That's why I haven't lost a trade in like 3 months, because I look at literally everything. I look at retail sentiment, I look at fundamentals, and I look at technicals. I don't just take any trade that I see. I take it if it lines up with everything. So if you guys see anything like that, then that would be something that, you know, I would be looking to take. But yeah, Alan, if you could find the exact entry, then I'll look it up for you. But I just have no idea what you're referring to, because there's so many entries here that came up between that time. So I'll come back. I'll scroll down again later, Alan, if you do see it. But I'm going to scroll up and I'm going to go to the next question for now. Okay. Let's see. So, okay. So let me just check real quick. Alan said it was a variation. So I think the thing that I was looking at over here, so there's a couple variations. It was like, I think the last time I was looking at trades were like around here, like around 10 to 11. So let me see if I can find any variations here. No variations over here. If you're talking about this reversal right here, yeah, I would have taken this. This would be a version 2 variation, because we were looking for sells at that time anyways. So there'd be a version 2 variation right there. I would have taken that, and it would have hit full TP right there. Again, with this one right here, another variation, a version 2 variation. I would have taken that right there too, and it would have hit full TP right there. So yeah, pretty much all these strategies. I mean, if there is a strategy there that applies, then yeah, I probably would have taken it. A couple of things I would look at first would be like retail sentiment and fundamentals, but I think everything here was looking for a possible sell. And I think that was it, Alan. So it must have been one of these sells here. So yes, I would have taken this, and yes, I would have taken this one as well. Yeah, and CT said a good one at 10 a.m. too. Yep, right over here. Yeah, this one right here, exactly. Variation right there. I think at this point we were still looking for buys. So if I was looking for a variation right there, that would have been a full TP right there as well. So I mean, there's a whole bunch there that could have been taken. Rick said, can you do a quick 5K trade, please? Not right now. It's at 3 o'clock. Spread's probably crazy. Market's just reopening from the swap. So definitely not right now. Okay. Yeah, spread's nuts right now. All right, guys, I don't want to skip any questions, so I'm gonna scroll right back up, and then I'm gonna answer what's next over here. All right, let me see what we got here. So I answered Alan's question. Jeremy's asking, I joined earlier this year. I joined early in the year. Jeremy, I'm assuming you're referring to last year, right? So you said, why don't you take the daily 10-minute strategy? Because it doesn't always come up, Jeremy. I mean, if you've been following it, it like rarely comes up. The requirement here has to be that it comes before 9. It doesn't come before 9 usually. So here, let me see. So, I mean, you can go back and look at it yourself, Jeremy, to like go and see, but the trades don't really come before 9. And the thing is, we use other confluences. So before we would just apply the strategy, but we have other confluences that we use. So if the confluences don't line up, then we don't take the trade. The main reason why we don't take it is because it usually doesn't come before 9. Or if we do have it, we take the trade within it. Because the thing is, we're scalping. So even if we get a trade here, like the main reason why why I don't personally take this anymore is because it takes up a lot of capital, right? If you're going to take a trade on the 10-minute, I don't want to tie up my capital in this one trade when I can be trading a bunch of trades within it. So for me personally, that's my main reason why I don't take it. The main reason why we don't take it on the sessions as much is because it just doesn't come up. It'll come up after 9. So let me see if I can find one over here on the 3rd. Let's see. And another thing too is the volatility is a lot lower. So that's another thing that you want to keep in mind. So you joined earlier in the year last year. Obviously, it was around this time, volatility was high. In the summer, volatility is low. So you're going for 1,500 pips. If price is moving like 500 pips for the entire day, you're not going to get the daily entry, right? You're going to be holding on to that daily for like 2-3 days. I know you rejoined later, so you probably missed the entire summer when the market was slow. That was the reason why we stopped using it as much. The reason we stopped using it now is because I don't like tying up my capital in one trade and then not be able to take scalps within it, right? So let me see if I can find one over here. I'm trying to find a trade so I can show you. Okay, so like for example, right here on the 3rd, I think this was Monday. Volatility was decent on this day. I think the 3rd was Monday. I could be wrong, but I'm pretty sure that was Monday. Or actually, we didn't even take it on Monday. What was on Monday? Oh, it was New Year's. So yeah, we didn't take it on Monday because that was New Year's Day. But let me check the one after it. I keep forgetting that we're in like New Year's just happened. So this is the one from the 4th, which was Tuesday. Okay, so here we are on the 4th for Tuesday. I'll just go over here real quick. All right, anyways, so here it is on Tuesday. This actually came on time. Or no, I didn't. It actually came after. So main thing that I just discussed earlier, the cutoff time is 9 o'clock. This came up at 9:40. So that's the main reason why I wouldn't have taken it. But I still wouldn't have taken it either way because I don't want to tie my capital in one trade here. So for example, if I take this with, a decent lot size, which is worth, holding it for, like, you guys can see how long it probably took for it to actually hit. Or I don't know if it even hit. I think we wouldn't have taken this because we were looking for buys, but you guys can see how long this trade actually went on for, right? It literally cut into the next day. So it went through the entire day and it would literally keep going forever. So it defeat the purpose for it being a daily entry because there wasn't enough volatility. The daily entry means that you're trying to get in and out of this trade within the day, right? This is the previous day and it cuts into the next day right here. So the thing with the strategy is you're trying to trade this as a daily entry. And if you're taking this, like say, for example, if I take this with a decent lot size, which would be, let's see, 3% of my account. So if I was going to take this with 3% of my account, price will just keep going back and forth within this price point and I'll make no profit, right? Until I move my stop loss in profit or until I close out. While I can take a bunch of little scalps within here, going for about 1-2% profit, and I can just catch, instead of going for that big move right there, I'm going for these smaller moves. Because I would consider this daily strategy is what I would consider a lazy person strategy, right? Because a lot of people like the strategy because they don't have to do anything. They just take it and then they just wait for it to do something. For me, I like to actively trade. So instead of me going for this and going for like 1,000 whatever profit, I can take a bunch of these little 100 pip moves and catch multiple thousands, right? So I don't know. It just depends on the person, right? If you're a lazy trader, you probably would like the daily strategy because you don't have to do anything. But for me, I try to maximize my time because I trade between 6:30 and 8. So within that period, I want to get, as much profit as possible versus just taking this trade and then letting it pretty much run. So let me see real quick. I think that's it right there. Yeah. So there's my explanation of the daily. So yeah, so going back to what I was saying earlier, guys, the main reason why I personally don't trade the daily is because volatility is usually low. Well, I mean, it's not low right now, but on some days it'll be low, and I don't want to tie up my capital in one trade. It still works perfectly fine. It's just the fact that the trade doesn't generally come up when it needs to, and the fact that it just takes too long for it to hit. So there's my explanation for the daily there, but it still works. It's just that you have to use the other confluences to make sure that it's actually going to be quality daily entry, not just some random entry that you're taking. Yeah, Rick said eventually I get another challenge just to do 10 minutes. Yeah, no, exactly, Rick. So if you have the luxury of doing that, the daily still hits. So the thing is, it still has a pretty decent win rate. So you can take that trade and take a 1% risk like almost every day, and you'll end up in profit long term, right? At the end of the month, the end of the year, you'll end up in profit. It's just a long grind. So if you guys have a bigger account where you guys can just let the trade run, another reason why we don't like applying it is because for FTMO, you can't hold trades over the weekend. So say if you get into a trade on Thursday and it doesn't close out by Friday, you're gonna get screwed because you either have to close out for a loss or close out for a small win when you could have traded within that range. So, all right, done with that question. Let me scroll up real quick. See what's next. Jennifer's asking, could you review the triple confluence entry? Yeah, sure. Let me pull up the 1 minute here. I don't think we had any today. Here, I'm going to look first to see if I can find one, and then I'll put up the requirements. Let's see. Or this is what I'll do. I'll pull up one where we actually had an entry, so I can just pull it up. I don't know if we had one on. I gotta change the name for that so I can search it up because we didn't have one of those in a while. All right, whatever. I'm not gonna find it. Let me just go back and see if I can find one here. Nothing there, nothing there, nothing there. Here, I'm gonna go back to like a couple days back. So I think we had one like yesterday, possibly. Let's see if I can find one right here. Nope. 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 I also got to find it during the New York session. Man, let me just see if I can find one here because I know we did take one. I just can't remember when we took it. Let me just scroll up real quick. Not that one. I'm pretty sure we had one that was kind of recent. Just can't remember what day that it happened on. Just looking at all of our wins here. It's probably last week. Variation. Okay. 3-minute variation. I swear we took a high-low scalp. No, it's a variation. No, it's a variation. Jeez, we haven't had one in a while. Okay, here, perfect. So on the 23rd, I think the 23rd. Let's see. December 23rd. So far back. Yeah, we haven't had a high low. Well, not one. I know there was a couple that people have caught, but not one that we've caught on the live session. So let's see, that trade came up around 8 o'clock. So it was in the morning. Now let's rewind it to here. 8 o'clock. I can't find it. All right, this entry came. It was on this bias signal at 7:55, I think. All right, 7:55. And am I tripping? Oh, this is the 22nd. My bad, guys. Let me go forward a day. It was like at 7:55 on the 23rd. God, this thing's taking forever. Almost there. Sorry, guys, this is gonna take some time because can't rewind it to like a different. Let me see if I can change this to a different. Okay, I think this will be easier if I let it run. Change the 10-minute. There we go. Go back to the 1 minute. All right, it was around like 7:55 on the 23rd, which was like right here. Okay. Right. I think, yeah, it was this one here. Okay. So here we go. So we have the high right here. All right, guys. So let me just put the requirements over here real quick. Scroll down. All right. So sorry, guys. I did see your messages. You guys were trying to help me find it, but I didn't look at the messages till now. But anyways, this is fine. I'll show you this one because this is one that we actually took on the live session. So this might look familiar to a lot of you guys because it's one that we actually did take. A lot of us took it and we caught it. So the triple confluence is 3 different K2 strategies that all apply on one candle. So for this one right here, the first strategy that we're going to look at is the intraday strategy. So we're looking for a valid K2 momentum signal right here. We have a valid buy signal, and it's valid because we have a green candle within a buy signal. So it's green and green, valid buy. You want to confirm that the trend meter matches. Right here, the trend meter is green. So with that said, this would be a valid entry using the K2 momentum intraday strategy. So for this one right here, there is a valid entry. For the second strategy over here, which is the K2 pivot scalp strategy, you want to confirm there's a valid K2 momentum signal. We have a valid one right there. Same requirement as this one. And you want to confirm that price is above or below the pivots. It's above the pivots right here. So we're looking for a buy. And then you would enter on the open of the falling candle. It seems like a lot of requirements, but all these requirements line up with each other. So it's not really that difficult. It's just knowing what to look for. So we have one here for the intraday momentum. We have one here for the pivot scalp. The third one is going to be the high-low scalp strategy. So looking at the high-low scalp, you want to confirm the previous high-low. So right here's a previous high. I know this was where the marker was, but when this candle right here touched it, this became the new high. So this one got invalidated. This one became the high. Um, this would be the previous swing low. So we've identified both, right? We identified the previous swing high. We identified the previous swing low. Second, you want to confirm price break and close past the previous swing. This candle right here broke and closed past this swing right here. So that's the second requirement. The third requirement, you want to confirm you're trading in the direction of momentum. Right here, we have a valid buy signal. So momentum is going up. Fourth, you want to confirm price is not ranging or consolidating. So price was ranging and consolidating within this area, but this candle broke outside of it. So it's no longer ranging or consolidating. Lastly, you want to confirm that price has not touched the previous swing. So as you can see, the swings right here, none of these candles have touched it. So that requirement's met. With that said, all three requirements here have been met, right? You know, this might go over your head if like you guys aren't really used to looking at these, but realistically, it's not that difficult because the first two strategies right here, it's the same requirement. You're looking for a valid K2 momentum signal. So basically, to make things as simple as possible, the main thing you're looking for is for a valid K2 momentum signal. This is your catalyst, because if you don't have this, there's not going to be an entry, right? So you're looking for a valid signal. And then on top of that, you just want to make sure that it's above the pivots and the trend meter is green. That's the basic two steps for these two requirements, these two strategies. You're making sure we have a valid momentum signal, and you're making sure that it's above the pivots and the trend meter is green. Vice versa, if you're looking for a sell, you want to make sure that we have a sell signal, it's below the pivots and the trend meter is red. Not that difficult, right? It's really simple. This is where it might get a little complicated for you guys if you guys don't understand the high-low scale. I know there's a lot of requirements, but a lot of these line up with each other. So if the first or second one isn't met, you're not going to have a third requirement. So you're just looking for the swing, you're looking for a break and close, and that's literally it. So once you guys are able to understand that these strategies are not as difficult as they seem, you'll be able to identify this really quickly. So with that said, with all of these three met up, that's going to be the triple confluence, because you have three strategies lining up on one specific candle. This is the same strategy that we've been applying for the past 3 months now. We haven't had any losses with this strategy. So the reason why we use this is for that specific reason. We haven't had any losses, not one loss ever since we started applying it. So with that said, that's pretty much what you'd be looking for. So with that, you'd enter the trade. 100 pips right there. You let it run. And there you go, full TP. So a lot of people don't understand why you have a wide stop loss. This is exactly why, because sometimes you'll see price kind of swing down and then it'll swing right back up. So it's just a safety net, but we don't really anticipate on losing any of these trades. So there goes the example for you right there, Jennifer. Jennifer said, are the time frames you suggest not trading KT strategy 6:30 to 6 a.m.? Sorry, Jennifer, I'm not even sure what you're referring to. So what is your question again, Jennifer? Because your question is, are the time frames you suggest not trading the KT strategy 6:30 to 6 a.m., 6 to 6:30 a.m. only for you? Oh, you're talking about like when not to trade? I mean, yeah, for the most part, it's for US 30, because you're not trying to, well, I mean, it applies to pretty much everything, but specifically US 30, because that's when the market opens and when the market closes. You don't want to trade when the market's open or closing, because you're going to get a lot of manipulation around that time, right? Because you get pre-market moves and then you get after market moves. So 12 to 5, you can't really even trade during that time because the market is closed majority of those hours. 6 to 6:30, you don't want to trade because you don't want to be, so I'm not sure if you understand the reasoning behind not trading between those time periods. The reason you don't want to trade between 6 and 6:30 is because if you're in a trade from 6 to 6:30 and the market opens at 6:30, price can gap or it can spike in one direction or the other. So if you're in the wrong direction, it'll spike and hit your stop loss, right? So, but it works the same way with like other assets too. Like if you're trading gold, it's going to be the same way because the market's going to open, it's going to spike price either way. So, I mean, it's not necessarily just for US 30, but it's just like a spot that you probably shouldn't be trading in. So let me just go to 6:30 real quick to show you guys kind of what I mean by that. All right, so the market opened right here at 6:30, right? So the reason why I don't recommend anyone enter around this time is because you get spikes in price. I mean, it doesn't just apply to US 30, it applies for like pretty much anything. Jennifer said, I mean trading variation on Forex. 12. So there's no variation strategy for Forex, Jennifer. I think you're mixing up a lot of things. Like, you know, we've had this discussion before with like you mixing up a lot of strategies and mixing up different concepts. I think you got to go back and just stick to one thing, Jennifer, because there's no variation for Forex. Not sure where you saw that. And the whole time frame, you know, with regard to, I know, but so you're asking just an example, any strategy. It doesn't matter what strategy you're applying, Jennifer. It matters the time that you're looking at, right? I'm explaining to you that like 6:30 is not a good time to trade because that's when the US market officially opens. So if you're trading Euro USD or you're trading anything, you're going to see a gap in like anything that you trade. So what I'm trying to get across to you is the fact that it doesn't matter what you're trading. It's going to highly affect it for US 30, obviously, because that's when the US 30 market opens, but it's also when the stock market opens. So let me see if I could find it. And this is something that you could even look at yourself, right? If you look at the market here at 6:30, look what happens between. So if you enter a trade at 6 and 6:30 hits, look at this big gap of price right here, right? You don't want to be in a trade when this happens. It doesn't matter what you're trading, whether you're trading US 30, your USD, trading gold, you're going to see a gap around that period or a spike in price because the US market is opening around that period. You don't want to trade around 12 to 5 because the market is closing. And it doesn't mean just US 30, it means for every other asset. So I think you're kind of making it more complicated than it really is. The reason for not to be trading between 6 to 6:30 is because market is opening between that period. So like you can look at the time here. You can be in a trade between 6 and 6:30. If you're in a sell right here, you're gonna get screwed because price is gonna spike up. Or if you're in a buy and price is the opposite, you're gonna get screwed because price is gonna spike down. So the reason why I said not to trade around that time period wasn't specifically for US 30. It was just in general, because, you know, using basic logic, you don't want to trade around opening price, like opening time or closing time, unless you're doing a swing trading strategy where you have a big gap for your stop loss. So hopefully that makes sense to you, Jennifer. Let me know if it's still confusing for you so I could kind of explain a little more. But the main reason why you don't want to trade between 6 and 6:30 is because market is opening. The reason you don't want to trade between 12 and 5 is because market is closing. So there's a gap in between where you should probably just be waiting for market to stabilize for the next day. Jennifer said, okay, so that's a big window by market open and close. I mean, not really. It's 30-minute window for the open. And then 12 to 5 is when the market closes. So, I mean, depends on what you want to trade because the market closes for US 30 at like 1:30 and it's opening back at 4 o'clock. So, I mean, I wouldn't consider it a big window. That's just how it always is. The Forex market closes from like 2 to 4. So, I mean, depending on what you're trading, I think what you need to understand is just when market opens and closes, right? Because I think you're not familiar with that. Because I mean, you can check even like, let me show you right here. So for the Forex market over here, it is currently closed around 2. So you can kind of see how like price kind of moves right here too, right? So the reason why you don't want to trade when the market opens is because there's going to be a gap, and then you don't want to trade when the market reopens here after closes because there's no movement, right here. So yeah, I think we're getting too far into this where it just doesn't matter, right? So I think you should just not trade between those periods. Just don't trade on open and don't trade on close. It doesn't matter what you're trading, whether it's US 30 or Forex or gold or futures or anything really. You just don't want to trade on open. You don't want to trade on close because, I mean, just look at the market right now, right? You wouldn't want to be trading when the market's not moving at all because the market just reopened. There's no movement here. You go to US 30. There's also no movement here, right? So just keep that in mind. When the market reopens or when it closes, there's not going to be any movement. When the market opens for New York Stock Exchange, there's going to be too much movement. So the thing is, in the beginning at 6, there's too much movement. At the end, there's not much movement because the market just fully reopens. Jennifer said, I'm thinking Eastern time usually. Yeah, I think you're just, yeah. Okay. Yeah, you said, yeah, okay, move forward. Yeah, sorry. No, I think you're just making it a little too complicated, but just avoid opening and avoid closing, Jennifer. That's just the main thing, okay? And yeah, hopefully that helps. Sorry, I was trying to make it like make sense, but it's just like, you know, there's like specific reasons for why we don't want to trade on open and specific reasons why we don't want to trade on close because you don't want to hold it into the next day. All right, so let's move on to the next question. Let me scroll back up. Sorry, guys, we got a lot of questions here. I just want to zoom through this. We've been on this live session for almost 2 hours now, so I just want to get through this real quick. Let me make sure there's no other questions here that I'm missing. Okay, so Adil is asking, can we change settings of the high-low boxes so it's established 5 candles after? Yeah, I know the settings are set at that, Adil. The problem is that it's going to repaint until it gets to the 5 candles. So it does. So like you have one candle here, 1, 2, 3, 4, 5, a new one comes up, right? 1, 2, 3, 4, 5, a new one comes up. So we have a low right here, 1, 2, 3, 4, 5, another one comes up, 1, 2, 3, 4, 5, another one comes up. So it's already set at 5, Adil. But the problem is if you're looking at it real time, it's going to repaint if it changes like right after. Like say, for example, we have a high here. If price pushes above it, then it's going to create a new high. So it's already set at 5. You don't have to change anything in the settings. Yeah, no problem, Adele. I'm going to zoom through these real quick. Let me see what else we got here. Jennifer is asking. Sorry, let me scroll down a little bit. Jennifer's question is, could you outline what strategy entries would you personally take? I only apply 2 strategies, Jennifer. It's the same thing every single day. I apply the variation, I apply the triple confluence. That's all that I use. So those are the ones that I would recommend you take. You know, it's the same thing we do on every live session. If you want to go back and watch the previous live sessions, I do the same thing every day. It's just those, and I tell everybody every morning, that's all I take. So those are the ones that I would recommend that you apply during the live sessions. You can see that I almost never apply the 3-minute strategies, only sometimes if the confluences line up with the 1 minute. So say, for example, we're looking for a buy on the 1 minute and we get the 3 minute that comes up, right? Then I'll take the 3 minute. But for the most part, I'm usually just on the 1 minute applying the variation and the triple confluence. Those are the 2 ones that I'm generally using. Jeremy's asking, what strategy do you use for regular Forex like your USD? I don't trade Forex anymore, but the only strategy that I used, like the one that I used for all the signals when we used to provide signals, was the K2SR zone strategy. That was the main one. B's asking, why do you only take the triple confluence trades now rather than the high-low and intraday? I don't remember you ever losing them, if I remember correctly, because conditions have changed. You know, the market isn't as smooth as it's been like prior. So in order to increase our win rate and to provide quality entries, we're looking for triple confluences. That's why everyone has the option to apply them themselves, but they're not always going to hit, right? You're going to have wins and losses. You're going to balance out at like some profit. If you just focus on the quality trades, then you know your wins will just add up, and then you don't have any losses. Kind of like how we've had for the past, 3 months now. We haven't had any losses, so that's why we've just been applying it that way. It's more quality over quantity. So that's why I've just been applying the triple confluence. I mean, you guys are welcome to trade the other ones, but there's higher risk that comes with that. I'd rather have 5-10 wins at the end of the week rather than have 10 wins and 2 losses and have less profit. So yeah, that's my main reason B. I mean, there's no specific reason other than that, but main reason is just for the higher quality trades. I just don't like losing trades. So that's why I don't necessarily use them individually anymore, but they still work, as you guys have seen. Jennifer is asking, have you seen the high-low indicator repaint after a double wick? Yeah, because it doesn't establish until 5 candles have passed. So there's nothing wrong with your settings. The thing is, when you're applying the variation, you're not looking for an established high-low. You're just looking for a high-low. So you can't fix it because it's not gonna stick there until 5 candles have passed it, because that's what it's meant for. The variation is a variation to the high-low. The high-low is what we originally created it for. Variation is just something that you use. It's a little bit more riskier. That's why I didn't really want to teach it to anybody. But obviously everyone wants to use it now because it's so profitable. So there's nothing you can change on that, Jennifer, because it's going to repaint until it actually establishes. Let me scroll down. I'm going to try to zoom through these questions, guys. Sorry if I'm going a little fast, but we've been on the session for like 2 hours. So I kind of want to get off and get some lunch. But let me just get through these really quick. Hassan's asking, the variation you said wasn't valid at the very end of the session today. Can you go over why? I'm assuming because the wick didn't fully touch the price. Yes, that's exactly why, Hassan. So let me go over here real quick. And so we got off the live session around 8 today. And we were looking for an entry, right? So 8 o'clock over here. All right, so we were looking for an entry. I don't think it was this one. I can't remember which one it was. Hassan, I know it was one of these though, because it was like towards the end. So for this one right here, there was like definitely no entry for a variation. I think it might have been this one right here. So going back to the variation strategy, that's exactly why we wouldn't have taken it. Because for the variation, we're looking for a double wick rejection off the high low, right? If there's no double wick rejection, there's no entry. So all of the entries right here up to 8, there's just nothing here. So like looking at this right here, obviously no double wick rejection. Right here, no double wick rejection. Right here, no double wick rejection. I think this is the one that you might be referring to right here, because it got really close, but it didn't close right on it, unfortunately. So like right there at 736, I think that's the one that you're referring to. It got really close to it right there, but it didn't touch it, right? If it doesn't touch it, it doesn't classify as the strategy right here, because you need a double wick rejection off the same price. So that's why we didn't take that one right there. Let me scroll down a little bit. Delmas is asking, how do you get words to show in the box to the right of your screen? I wanted to show like yours. So in order to get that, Delmas, you got to right click, or actually don't right click, or no, technically, yeah. Right click on your chart, go to settings, go to scales, and then right here, you'll put indicator name value. See how it's unchecked? There's no names there. If you check it, then it'll have the names right there. That's how you'll set that up. Let's see. John's asking, would the high low at 654 today have been valid? The one that got wicked out. Let me go check real quick, John. So you said 654. So this right here would not be, or actually, oh, you're right. It would be an entry. Yeah, so this one right here at 654 would be an entry. The reason why we didn't take that was because our bias was still bullish this morning. So that's why we didn't take it. If our bias wasn't bullish, then, we actually, yeah, and this would be an entry using the triple confluence too. So another example for the triple confluence over here is this one. The reason why this would be a triple confluence is because we have an intraday entry. We have a valid sell signal here. Trend meter is red. That's the first strategy. The second strategy is the pivot scalp. We have a valid sell signal here. It's below the pivot. So that's for the second strategy. And for the third one, we have a high-low scalp because we have price breaking closing past this low. We have a valid sell signal right here. Also, so we're trading in this direction of momentum. And then also we have price not testing this area prior to this break and close. So with this candle right here, this would be an entry for all three strategies. You would enter this for a short. And yeah, it would be valid. It was just the fact that we didn't take it was the fact that that our bias was a buy. So if you took the trade there, I actually would have stopped out. So that's that's exactly why I wouldn't have taken it, because our bias was still a buy. So this is why it kind of bounced around this area right here. Technically, it'd be a valid entry, but using the confluences that we have. So this morning, the retail sentiment was like at 70 something. It was at 70 something. It was high. So we weren't looking to take any sells. Also, the fundamentals were just right down the middle, right? It was like at 20 points or 40 points. So the main reason why I wouldn't have taken this trade here was the fact that it would go against our main principle, which would be sentiment, because we don't want to trade where everyone else is trading. You can see that that kind of played out right here because price spiked back up, right? The reason it spiked back up is because the bias was still for a buy. So I wouldn't have taken this. We also didn't take it during the live. However, if the bias was opposite, so for example, if the retail sentiment was instead of 74% short, if it was 74% long and fundamentals were red, then yeah, I would have taken the sell. But yeah, we didn't take it for that specific reason. But yeah, technically it would have been valid if you were just going off the strategy by itself. But obviously we don't go off the strategy by itself because technicals are going to be the last confluence. First confluence is always going to be retail sentiment. Second confluence is going to be fundamentals, and the last confluence is going to be technicals, which the strategy would fall under. So unless the first two line up, I'm not looking for any entries at all in that direction. Let me keep going down a little. Let's see, SS, I'm still practicing on a demo, and I'm going to start my challenge in a month or two. Do you have any advice on completing the 100K challenge? So my main advice would be to just take what I'm taking during the live until you pass or until you're confident. I would recommend keep practicing and make sure that you're confident and you can take trades without being nervous or scared about taking an entry. If you're at that level, then you're fine. Just apply the same trade that you've been doing. What I would recommend, main advice would be to use proper risk. The thing is, here, I got to break it down for you guys because it's really simple. I feel like a lot of people they make this way more complicated than it is. Okay, so to pass FTMO, stupid. All right, so to pass FTMO challenge, you only need a 10% profit gain, right? That's literally all you need. So the problem with a lot of people is they don't understand, they get too focused on profits, right? The thing you should be focusing on is percentage, because if you focus on your profits don't matter unless it relates to what your percentage is, right? So for example, here, I always recommend that you guys take a 1% to 3% risk per trade, right? And the thing is, we haven't lost a trade in 3 months. That's why everyone's passing their challenges. Like literally, it would make 0 sense for you not to pass your challenge if all you did was take the trades that I take during the live. But the problem is a lot of people want to trade on their own or do their own thing or take a risk or over leverage, where they end up blowing their account or they make, they violate the account one way or another. So for example, here, if you just take one trade with me each live session and say each trade, one day, so you make a 2% gain each live session, right? Guys, how many live sessions do you need to pass FTMO? You need 5 live sessions, right? That's literally all you need. You have 5 live sessions with me, you get 2% per trade. That will equal a 10% profit gain. What happens when you get a 10% profit gain? You pass FTMO. So what I would recommend is you guys focus on percentages, right? Don't focus on your profits, because the thing is, I know you guys will see big profits and you guys want to over leverage and make big profits right away. The thing is, if you guys are consistent and you can just go for at least 2% gain per session, right? And I can show you the profits here, like literally. Okay, so here, let me just show you. I'll show you from the results. Okay, so the results from last week. Let me see. What are the results from last week? Okay, so last week we had 9 wins, literally 9 wins. If you could do 9 wins, okay, I'll make it as simple as possible here. Okay, so you make a 2% gain per trade, right? You're not looking at profits, you're looking at percentage gain. 2% gain times 9 wins. That's from last week. You guys can see here, would you pass your challenge? Yes, because you need a 10% gain, you would have made an 18% gain, right? So my main advice to you guys is to use proper risk. I try to remind you guys every single day, but what happens is people just want to over leverage and make big profits, when in reality, you got to go for a percentage gain. So you're doing a 100K challenge. Let me put this here. All right, 100K challenge, right? Okay, 100K challenge. Usually what you use with the 100K count is a 5 lot, right? Per scalp. All right, 5 lot per scalp. And you're going for 100 pips. So if you're going for 100 pips, and I'm going to break down the math for you guys to show you guys that it's really not that difficult. Five lots per pip is going to be $5 per pip. I mean, yeah, 5 lot is going to be $5 per pip. So 5 times 100 pips, you're going to make 500 a trade, right? 500 profit potential per scalp, right? That's how much you're going to make. Okay, so a 100K, so 100K times or divided by, my math sucks, so let me see if I do this properly. Sorry, that's wrong. 500 divided by 100,000 is 0.5% gain, right? So you're doing like, if you're doing like 1 or 2 scalps, that's like equal to, sorry, I don't know if my math is right on this, but okay, back to what I was saying. So if you're doing like 2 trades, 2 scalps per trade, that's going to be maybe like 1% gain. And maybe I'm going, I'm doing less than what the actual gain is. So 1% gain. If you're to do that per scalp, you would literally need just how many trades? You need about like, let me scroll down. Maybe someone's correcting me right now. Exactly. Yeah. Yeah. So exactly. This would be a 0.05 gain. So the thing with this is conservative trading, right? I trade conservatively now. If you guys want to increase your lot size, this is what I usually recommend people to use if like you're not confident. Because the thing is that I want you to blow your account over leveraging and going too high. So with this right here, you have a 0.5% gain. In order to pass, you need about 20 trades. I don't know if I'm right. I might be wrong, but okay, yeah, thanks, Professor. You cleared that up for me. So you have a whole month to take 20 trades, right? And if you look at the trades for the entire month of December, we had 27 wins, 0 losses. So if you took all these trades here, and the thing is, this is not just from the 1-minute scalps. We have like the 3-minute scalps here and some of the breakouts that we take. So some of these profits are actually going to be, some of these are actually going to yield you more profit than it would for just taking the 1-minute trades. Because you can see from last week, we had like a couple 3-minute trades, couple breakouts that were hitting TP. And as long as you guys are just, collecting profit from those trades, not even full profit, you can still lock in like a pretty good amount of, yield to reach your profit goal. So what I'm just trying to get across to you guys is if you guys could focus on just winning, and for those percentage gains, you guys can easily pass. We've had like 4 or 5 people pass their FTMO and MFF this week from doing that. And just like what Solange said, he said, yeah, 0.5% gain with a 1.5% loss, which is very safe because you rarely lose 3 in a row. And the thing is, if we ever lose a trade during the live, we just take a break, where we just, don't trade for the rest of the day. Because the thing is, we rarely lose. And that's if you stick to the strategy. So trading conservatively, you can use a 5 lot. If you want to be a little more risky, you can increase it to like a 7 lot. Because if you're doing a 7 lot, then you're going to have 700 profit potential per scalp, which is going to yield you a higher percentage of profit, right? So I mean, it depends on how you guys want to do it, but yeah, I mean, if you guys just stick to the game plan and don't go off it, you guys should be perfectly fine with passing your challenge and getting funded. So back to what I was saying earlier. So I kind of went off track there. I'll be at SS. So I mean, literally, if you just go back and just see all the trades that we take, there's just if you're consistent and you don't over leverage. I know it's going to be a slow process. This is what happens, and this is what I see happen with a lot of people. People will follow the game plan and they'll get to like 9% profit gain, right? And they need one trade to pass their FTMO. What happens when they do that? They increase their lot size to like a 10 lot, and then they lose the trade, and then they lose everything. They go back to start over from their challenge to break even. So if you guys just stay consistent and just catch all the wins, it should be a no-brainer, for you guys to pass and get funded. So my main advice to you, SS, is if you're not confident with trading on your own, just stick to our live session, and then you guys can easily you make your way above your profit requirement, and then make your way to your verification. Because the thing for the challenge is difficult. The only difficult thing about the challenge is that you have a time limit, right? You have 30 days. For the verification, it's even more time, and you have a smaller profit goal. So this is the hardest part. Hardest part is the challenge. Once you get past the challenge, verification should be no problem. And then once you're funded, this becomes all real profit. So, keep your focus on the long-term goal, because generally that's what's going to be necessary for you guys to be consistent long-term. Yeah, no, exactly. Like what Randy said over here, he said 200K, 10 lots would need 20 days for one trade a day. Scary when you get to the last couple of days. Yeah, but the thing is, every month has been pretty consistent, right? So like December, November, October, and then January. I think this month is probably going to be a little more, because we've been taking more trades this month. I think the thing with the winter season is that the market is a bit slower, so you don't get as many trades. So in that case, you might want to increase your lot size, but it just depends on how you want to take it. If you guys are okay with consistently just getting to that point, then you'll be fine. You just can't get off track with your game plan. But yeah, like B said, 15 lots is tempting. Yeah, I mean, if you get close to the end, then you can increase your lot size. But in the beginning, I would recommend just taking the conservative lot size. So conservative for 100K is gonna be 5 lot. Conservative for 200K is gonna be 10 lot. That's basically what I use for all my trades. But that's because I'm funded already. I don't have a time limit. It's just me collecting profit and then taking my cut at the end of the month. Yeah, I mean, that's exactly what I was just saying right now. B said, I'm surprised you don't use a 15 lot, to be honest. Thing is, I'm funded, so whatever I make is profit, right? I'm not trying to go for any big profits, because the thing is, if you go for a bigger risk like that, odds of you losing the funded account are a lot higher. So that's why my trading is a little different. When you guys are with the challenge, you guys are trying to get past that challenge right away. Yeah, Steve, you're like heavily over leveraged. You should not be using a 10 lot on 100K. Yeah, you shouldn't be using a 10 lot at all. You should definitely be using between 5 and 7. 10 lot is like way over leverage on 100K account, because that's what I'm using on a 200K account. But yeah, the way I trade is different, because I'm already funded. Once you guys are funded, you guys will see that it's not about making big profits. It's about staying funded, because I mean, it's basically free profits coming in after once you're funded. So that's why I don't increase my lot size. I just keep it at a consistent 10, and then I just keep stacking up, and I move those profits to my personal account. That's why you guys have seen me trading on my personal account now, because like my FTMO and MFF, these are like profits that are, I still got to split at the end of the month. But for my personal here, this stuff just keeps coming straight to me. So what I'm doing now is I'm pretty much staying consistent on my FTMO and my MFF or whatever I'm going to be using. And then I move a lot of those profits to my personal account, and then I just keep those there. And I'll just keep increasing my lot size on there, because you guys can see from my profits here, I went from using a 0.3 to now 0.6. Right. So like, like last month I was using a lot of 0.3s on my personal, and then I just moved some money over there. So I was, and you guys can see from my older profits here. Yeah. So I was using a 0.3, and then I just keep transferring money over to my account. And then now I'm using a 0.6, right? I just deposited like another 1,000 into there. Now 0.6, I deposit another 1,000. I'll be using like a 0.9. And it just keeps, growing my my personal account. Other than that, let me see. Randy said social trader. Yeah, that's what everyone else is using too, Randy. I mean, I use FTMO to my MFF to my personal. That's what I use for all mine. It just copies over to all of them, because it doesn't really make a difference. It's just executing from what my master is doing, the master account. B said it's kind of crazy to think that a 200K count is really just a 20K count on your personal account, since it's at max loss. No, exactly, B. That's why you're kind of capped at where you want to trade. That's why for me now, I'm mostly like, I'm already maxed out on FTMO, so I'm probably gonna, well, that's why I started going over to MFF. And then after MFF, I'm probably going to go on to the next, whatever next company that I can find that is legit. Yeah, no, definitely. Patrick's the same here. Keep moving part of my FTMO profits to build my personal account. And that's a smart move, because you have full control of your personal. B's asking, do you recommend a personal broker for UK? I personally use Hugo's Way. I know Hugo's Way has like a bad rep because it's unregulated. I know a lot of people in the UK use IC markets. So you might want to use IC. I haven't used them because I'm in the US, so we can't use them. But for a lot of people that are from the UK, they use IC markets. So that might be one that you want to try out, B. And then you can do what I'm doing. Start off with like 1,000, grow that account, deposit another 1,000, keep growing the account, and then just make withdrawals when you need to. For me, I never let my Hugo's Way go over like 5K. When it goes over 5K, I'll withdraw, and I'll just reset it back to 5K, because I don't completely trust Hugo's Way. Don't get me wrong, I like them, but I don't completely trust them because they are offshore. So, you never know what will happen. Your account just might disappear, and you can't really do anything about it. So just remember to regularly pull out. Other than that, let me see if there's anything else here. B's asking, are the spreads usually better on personal, broker, or the same? It's about the same. My profits are pretty much similar on my Hugo's Way versus my FTMO. All right, let me scroll up, guys. I don't want to miss any other questions. Let me see what else I'm missing here real quick before. Yeah, we've been on this session for a long time. But it's all right, guys. I'm here to help you guys out. So I'll stay on this live until I've answered everyone's questions. Let me scroll down real quick, make sure I'm not missing anything. So Adil is asking, London session low has a price line of, however, when I look backwards to the trades, London session low is today. Adil, so the difference with the London session is that it takes the previous day. So the thing is, if you were looking at the London session from this morning, it's going to give you the London session from the previous day, not the one from just happened, because the London session is still active. So when we're trading at 6 o'clock, this is something that confuses a lot of people, including myself. I know that because sometimes you'll see that the London's kind of off. The reason why it's off is because when you're trading at like 6 o'clock, like, you know how we trade over here at 6 o'clock, the London session is still running. So it's giving you the high lows from the previous day, not the one that just happened, but from the previous day. So that's why a lot of people kind of get confused when like the London is like not exactly where they would think it'd be, because the new sessions get updated when the session ends. So that's why it's not necessarily where it is from like the session, because the session is still active. When it's after, it'll update. So I forgot how long this London run till. Let me see if I can find it here. And if you want to change it, you can always change it. Like you can change the times here, but I think this works better because the thing is, if you keep adjusting it to where the market is still open, it's not going to give you solid high lows. It gave you just solid high lows from the previous day. So it runs until like 11, 3 hours before 11 is 10, 9, 8. So it runs until 8. So pretty much those London high lows are not going to update until it reaches 8 o'clock. But if you want to adjust it, you can. I mean, you know, by all means, if you think it's better off that way, I personally like it how it is now. I think it works perfectly fine. So I just leave it as is. But yeah, the sessions doesn't update until the actual session closes. Yes, Adil, exactly. So Adil got it. So for Asia session, it would be the same day or previous day. Exactly, yeah, until it ends. So for right now, this Asia high is from yesterday. It's not from today, it's from yesterday. And then it'll update when the session closes. So this session will close at midnight my time. So it's 4:09 here right now in where I'm located. So it's going to adjust once the session ends, but you can always change it if you want. You know, it's just really up to your preference. That's the problem with this indicator, is that we all live in different time zones, so it changes a little differently. But it's just based off like however you guys want it. I think it works perfectly fine because this is what we've been using, you know, for the past couple months now, and it's been pretty solid. So I would just leave it as is. Yep, no problem, Ideal. Let me scroll up real quick. All right, guys, I just want to make sure I get everyone's questions. I don't want to miss any questions here because I know we only have these sessions every so often. Now that the new year is back in full swing, I'll try to have these sessions every week. So if you guys don't get your questions answered today, which you guys will get your questions answered, we'll have another session next week. So let me just see if there's anything else here. Let's scroll down real quick. Okay. Oh, Isaac. So Isaac, are you still here? Yeah, Isaac's still here. So Isaac said, explain the depth of market tool, how to set TP stop loss really fast. So I've been trying to drag my MT4 over to this screen because I have 3 screens here. I have one screen here, which is where my trading view is. And then I have 2 other screens right here. I try to drag it over, but it doesn't let me. I think it's locked onto the screen. So I can kind of give you guys a walkthrough of how to set it up. In order to set up the depth of market tool, just click on make sure you have an open chart for your MT4, right click on it, and then there'll be a tool. If you go down the options, a third option right there that says depth of market. You'll click on that tool right there. And then when that tool opens, a pop-up will come up. For the pop-up, in the middle, it'll have your lot size. So you'll put your lot size in the middle. On the left will be your stop loss. And then on the right will be your TP. So depending on where you want to set your TP, I think I have to move this over. So I don't know if you guys can see this on my screen. I have the depth of market tool right here. I can't move the entire MT4 over, so I can't show you on my screen how it works, but this like little pop-up moves over here. I kind of don't want to screw this over because the last time I did this, it stopped working. I don't know if it's because I'm on a Mac. The stuff isn't really compatible with the Mac. But this is basically what it looks like. Okay, perfect. So Isaac, you can see right here. When you right click on the chart and you click depth of market, you'll have this tool right here. In the middle will be your lot size. On the left will be your stop loss. And on the right will be your profit target. So I'm going for 500 pips, but you'll put 5,000 there. You just add a 0 to it because you have to put what the 0.0 is after without the point. So instead of putting 500 there, you'll put 5,000. For the 1 minute scalps, we put about 3,000 there, which is equivalent to 300 pips, and TP would be 1,000, which would be equivalent to 100. So this is what you would set up for the 1 minute scalps. I had it set to 500 earlier because I was trying to trail the move earlier when I was trying to catch that drop. Unfortunately, every time I entered, I just got stopped back at a break even. So it's made some profit, but not as much as I wanted to. So if you want to go ahead and try that on your screen, Isaac, let me know if you have issues with it, but that's exactly how you would set it up right there. You just right click on your chart, click depth of market, this will come up and you'll put your stop loss, lot size, and profit target right here. So when you hit buy or sell right here, Isaac, it's going to set a market order for a buy or a sell, and then it will automatically set your TP and stop loss on your chart. So wherever your entry was, it's going to put your TP 100 pips away and then your stop loss 300 pips away. If this is how you have your settings set up here, it'll just automatically set it for you. And that's how you would get that all set up here. All right, perfect. No problem, Isaac. Glad I could help you with that. Move this back over here. Hopefully it works. Last time I did that, my depth market stopped working. I was so bummed because it was so, I had to reinstall MT4 to fix it. I don't know why they do that. It's weird. It's I don't know. It's just weird how it's set up. And another thing that I want to tell you guys is, so a lot of people have been asking me, like, because I see a lot of people where they have issues where they're trading on a demo, or they're trading on a challenge or a trial on FTMO, and they do well in the challenge or the demo, but then they don't do well when they do their live, right? So what I would recommend and what I've been showing other people is, you know, for your master account, just set up your demo or whatever, because it helps with their trade psychology, and then just copy it to your challenge or your personal or your live or whatever you guys are using. And that might help you guys with, you know, your psychology of things. Other than that, Rick, so Rick's asking how to use the DOM. It's the same way that I just explained it right now, Rick. You just set up the DOM and then you enter it, and then it automatically sets a TP stop loss. I mean, there's like literally a buy or sell button right there. So you hit buy or, oh, fuck, what did I do? I tried to drag it over and then it disappeared. Ah, no. I'm really hoping that this didn't fuck up my DOM. Ah, fuck. Okay, guys, I'm gonna stop going on MT4 because it kind of messed up my MT4. I try to drag it over again, and it just damn it, it just keeps deleting off my thing now. I'm really hoping that it didn't mess up my MT4 because this took me forever to fix last time. All right, so I'm gonna stop messing with my MT4, guys. But yeah, that's how you do it. So Rick said, so you're entering it like one click. Yeah, exactly. It's just one click. You enter buy, it's at your TP stop loss. And then, or if you enter a sell, it automatically sets your TP stop loss. You don't input anything. You just hit buy or sell, and then it automatically enters for you. And I'm really hoping this didn't mess up my MT4. I'm gonna have to play with it or test it out before the live session tomorrow. If I see an entry, I'll probably test it out and see if it works. Oh, that would have been a good variation right there. Version 2. It's too late to enter though. Spread's probably super wide. And it already hit TP, so I missed it. I'll probably be looking for a variation. I'll probably just take one to test out my depth market tool to see if it's still working. Let's see. But I'm gonna go for a smaller TP, probably go for a half TP because I just want to get in and out. So if I see a scalp here, I'll probably take it just to, yeah, I know. Rick said the spread sucks, which it does. There was a couple of variations here that were actually, that just came up. There's one right here. One right there. We have a low, strong green candle, full TP off that one. And then actually we have another one right here too, a sell. But yeah, Rick's right. Spread does suck. Yeah, I'm not going to risk it. Yeah, no, you're right, Rick. I should listen to you. Rick said, I have no idea how people trade off and why with these spreads. It messes up his psych. Yeah, no, I'm not gonna mess with it. You're right, Rick. Thanks for reminding me that spreads suck during Asia. All right, so let me go back over here and answer whatever questions I have left. All right, so I answer Isaac's question. Let's see what else down here. Professor's asking what strategy were you using when you started trading the mid-market reversal? I was trading the variation, professor. So I was just looking for a variation to the downside. So what I took was, let's see. What I took was, I forgot which variation did I take? I can't remember what I took earlier. Trying to look for the entry. Or what we were looking for a variation. I just forgot what we were looking for. I know Patricia sent her profits earlier for that one. Let's see, because we took the same trade. Yeah, she caught this one right here. I can't remember which one we were looking at. Oh, I think it was this one, right? Or no, it wasn't. Yeah, basically I was looking, when I'm looking for a mid-market reversal, guys, I'm just looking for an entry, in the other direction. Or actually, no, it was, I can't even remember, guys, sorry. I know I was looking for either a variation or a triple confluence, but I'm basically looking for a variation in the opposite direction. I just can't find it here. And it's hard to figure out which one Patricia took because the timestamp doesn't align with where time actually was. Oh, I think it was this one right here. Okay, so it was this one right here. There we go. This is the one that I looked at. It was variation of version 2, professor. So I was trying to catch trades right here, couldn't catch any. Price came back up, it gave a variation 2 right here. I think I waited for it to close below the sessions before I took it though. Yeah, I think it was this one right here. And I just wrote it down right here. So I entered this one right here. I know I entered it like super late. I was supposed to enter it right here, but I was waiting for it to close below the session. So I entered it right here and then it dropped a little bit. And then what happened was I moved my stop loss in profit like right there, or I don't know, somewhere. I moved my stop loss in profit somewhere. And then it just ended up, or okay, so it was right here. When price dropped right here, I moved my stop loss in profit where my entry was, like right there. And then it just came up and stopped me out. So this is what I was applying earlier. I was just basically looking for a variation to the downside. I was waiting here. There was a couple close entries that would have came up like this one right here was close, but there was a wick. And then I think this one right here, I was waiting for this one to close and ended up dropping like last second. So I couldn't get up here, but I got into this one right here. It closed me out in profit. And then I just didn't try anymore after that because that's when we got that weird push over here. Yeah, that weird spike. And that's when me and Patricia were like, all right, we're done. So that's what I was applying there. Let me scroll down to what else I'm missing here. Kim said on the 1 minute chart, my candles are super short and it's super hard to see the wicks. Did you change the settings to make it easier to see? Not exactly, Kim. It's so let's see, 1 minute chart, my candles are super short. So my candles right here, my settings are a little different. So for me right here, the default is going to be, so for the symbols right here, let me just set these to default. I think this is what yours look like, right? So this is what yours look like right here, and they're kind of hard to see. I'm pretty sure this is exactly what yours look like. It's hard to see right here, right? So what I do is I changed my settings here. You go to your chart settings, go to symbol. For my body, I colored it black. For the border, or no, sorry, go back. For the body right here, I just chose a solid green. So instead of using the, the weird green that they have here, I chose a solid green. And then for the body, I chose a solid red. So it's like brighter. For the borders, I colored this black so I can see the wicks better, the body and the wick. And then for the wick, I colored it black as well. So that's why mine over here now look like this. Oops, what did I do there? What did I do? I did something. Now my chart looks like this. Ah, crap. Why did I do that? Let me go back and see if I could. Ah, man, I can't even change it back. I did something where, because now my candles look small. Yeah, I just screwed up everything today. I screwed up my MT4. I screwed up my trading view. Ah, man. Let me see. There's got to be something here that's causing my candles to look like this. Oh, it's the sessions. Okay. Because so like I was mentioning before, guys, when the sessions restart, it creates new previous session high lows. So it just reset because I think we're now in Tokyo session. So if I turn that off, it'll go back to normal over here. But those are the settings that I changed it to, so it's easier to see the wicks when you're looking for those rejections, Kim. So hopefully that helps with that. I know it's kind of confusing for it, but yeah, no, it works. All right, other than that, let me scroll down real quick. All right. Scrolling down a little bit. Jennifer's asking variation 2 is just a flat no wick candle. Yep, exactly, Jennifer. So basically a reversal candle, opposite candle of the high low, and then no wick. So for example, right here, we have a low and it's a bullish candle because it's pushing to the upside with no wick on the bottom side. That's gonna be the version 2. Paul got his COVID test back. Oh man, so Paul, you got COVID, unfortunately. Yeah, hopefully you're not doing so bad and your symptoms aren't so horrible. Hassan's asking, when confirming direction using momentum indicator, what does blue mean? There's no blue for the momentum indicator, Hassan. There's only green and red. So this is a momentum indicator. This down here is going to be the trend meter. The trend meter indicates when it's green, it means it's bullish. If it's red, it means it's bearish. If it's blue, it means it's neutral. So prices hasn't really chosen a direction. And you can kind of see right here. So like, for example, when it's green, you can see prices pushing up. When it's red, you can see prices pushing down. When it's blue, it means that price is going sideways. So the trend meter is the one down here. The momentum would be the vertical lines right here. Let's scroll down a little bit. All right, let me just scroll down a little bit. I think I answered all these questions here. Thanks, Kenny. I just saw your message. Yeah, I gotta order more shirts so I can send you guys out some shirts, or I can make it available to you guys. I ran out of shirts, so I gotta order some more. Scroll down a little bit. I think that's it for these questions here. Rick's asking, Sean, will you be trading pre-market NFP news? I won't be trading pre-market, but I will be looking at the market. So I'll be watching, but I probably won't be taking any trades because I'm not looking to take any gambles, in the market. Talanji said, with a variation, if the second candle rejection isn't as strong as the first candle, would it be a red flag? Not necessarily, Talanji. We're just looking for a specific double wick. On the 1 minute, there's a lot of noise, so I don't really look at the candle patterns as much. I just look for for a double wick rejection. For the variation two, that's where it does kind of come into place. If the candle is too big, we usually don't take the trade. I mean, but that's how it normally is with like everything, right? If the candle is too big, we usually wait for a pullback and then we'll try to enter that late. So the red flag would be if the candle is too big. If the candle is like a weak candle, it's okay. The main thing that you want to look out for is if the candle is too big. That's something that would raise a red flag for me. Yes, that's correct. So Jennifer said it's okay if it repaints for variation. Yep, exactly. So the variation, it hasn't established yet, so it can repaint at any moment for that. Mauricio says, thanks for being generous with your time, Sean. Yeah, definitely, Mauricio. I'm here to help you guys out, right? I'm doing this out of my own free will. I'm not necessarily doing this because anyone's paying for it. I'm just doing it because I want to help you guys out with these sessions here. I know previously, like people would have to pay for the mentoring sessions, but I'm doing this all completely free for you guys. Like even the people that aren't members, this is available on the YouTube. I mean, the members who don't have access to indicators, yeah, it's not going to be too much of a use, but I'm still helping you guys with like FTMO questions, MC4 questions, anything that you guys need help with. So let me scroll down a little bit. Yes, that is correct. So professor's asking, the trade that did not qualify for a variation would have been a variation two. Sorry, professor, that your question came in like an hour ago, so I'm not sure which one you're referring to on that one, but I think it probably would have been if we're looking at the same one. So actually, no, it wouldn't. I think you're referring to the one that happened like at the end of the session, which was like at 7 something, which was like right here. Let me just replay it. Yeah, so I think this is the one that you're referring to right here, if I'm not mistaken. Sorry, it was one of these right here, but no, it was not an entry for either variation, not for variation 1 or variation 2. Because this right here, there's no variation 2, there's a wick on the bottom. This right here, it's not a variation 2 either because there's a wick on the bottom as well. I can't remember which one we were looking at, but it wasn't an entry for either the variation or the version 2. Okay, let me scroll down real quick. Kenny's asking, what's the biggest account size for FCMO? The biggest account size is a 200K, Kenny, but you can have 2 of them. You can have a total of 400K in accounts with them. All right, let me scroll down. Patrick said, LOL, can't trust none of these unregulated brokers, beware buyer. No, exactly. I don't trust them completely, but he goes away, does pay out. So yeah, I do use them. It's just, if my money goes missing, I'm not going to be surprised. Yeah, exactly. I deal with the indicator. Let's see. Solange said with the variation of the second. Oh, no. Okay. Sorry to answer that. Let's see. B's asking, is there a better way to trail stop? Seems a bit clunky to do an MT4 by moving the red line. Hard to move it to correct positions. I think there's add-ons for it. B, like you can use some MT4 add-on. I'm not familiar with any of the add-ons. You can probably ask in the group, and other people do have add-ons for it, but I don't personally know any myself because I just do it by hand because I don't like not knowing where my stop loss is. I like knowing, like placing it in place and then just leaving it as is. Solange said I use it from the MT4 website, pretty straightforward. Oh, I didn't know they had it from the MT4 website. I'll probably have to go and check that out. Rick said Rick Reed is the voice of reason, end of the world. B said, so during mid-market reversal, wherever it's reversing, you're looking for variations in that direction and triple confluence in that direction. Exactly, yeah. So you can see from like right here, right? This is what we were looking for. You saw my markup here where we had price come down. I marked this up that price is probably going to consolidate, push up, consolidate. And then when it came back down from here, it would be nice to catch the high up here, but I'm not looking to gamble, right? So I'm looking for variations or confluences in this direction. So if I see an entry where price pushes to the bottom, I'll enter it. And instead of going for just 100 pips, which today would have been a good idea, because if I just went for the regular TP, I would have hit full TP. You can just trail your stop and try to catch it for the bigger move. So that's, I mean, it was a bad decision on my part, because I could have just locked in like 2,000-3,000 by catching 2 of the scalps, but I got greedy and I just kept moving it down, and it ended up getting stopped out like at 100 profit, which, I mean, it's not bad. It's still $100, but still, I could have just locked in the set profit. I just followed the strategy. But yeah, you're right, B. That's exactly what I'm looking for. JMax asking, is the version 2 variation at 11 a.m., bro? So let me go to 11 real quick. All right, JMax, so let's see. Go there to 11. Let's see, we're almost there. 11 o'clock, which is right over here. Okay, yeah, that is a variation right there, JMax. So on point with that. So right here, JMax was asking about the variation at 11. This would be a version 2. Reason for this variation is that we have a high, and then this right here would be an opposite candle. So we have a high right here. We have a red candle with little to no wick, or I mean with no wick at all on the top side. So with that said, this would be a variation version 2. One thing that you guys want to keep in mind that we're still testing. So it does hit, but in a lot of instances when this candle is so far off, because you can see the candle closes up here, we already missed out on like, you know, like a 20 pip, like a 200 pips right there. So in a lot of instances, when something like this happens, you might want to wait for price to pull up a little bit, like pull back and then enter later. Or in this instance, you know, it would have hit your TP already too late. There's a couple different confluences that we're using, or confirmations. Like you guys have probably heard me, Maddie, and Patricia on the live session. We're looking for a pending sell. So for example, right here, if I was to see this during the live session, I wouldn't have waited for the pullback because we have a pending sell here. So I would have entered right away. And what I mean by pending sell is that we have a buy signal here. So the next signal has to be a sell. So if we do get a sell signal, we're going to get that momentum push to the downside, which will be enough to hit our TP. So that's why I would be okay with just entering this right away instead of waiting for the pullback. If we don't have a pending sell, then I'll either not enter the trade or I'll wait for the pullback. So there's a sell signal right there. See what I mean? Like, I would be really confident with taking this trade because we have a buy signal here. What comes after a buy signal? A sell signal, right? So if we enter this here and we're anticipating a sell signal, you know, you guys measure each candle here for each signal that we get. Each signal candle is usually pretty big if it's a valid one. So for example, a valid sell signal right here, it's like it's 180 pip push. You're going for 100 pips, you know, you're probably gonna hit that before it gets to that point. So for example, right here, you could have entered it, waited for that sell signal. Sell signal didn't come yet, but eventually as it came, it would have pushed back. Instead of just 100 pips, it pushed, you know, like 200 pips. So that's what I mean when we're looking for a pending momentum. And that's something that we're still testing. So like I said before, guys, this strategy isn't official yet. Same with the variation. The variation is still not official. We're looking for other things to make the strategy even better. I mean, it's pretty amazing as is, but we're looking for other ways to make it even better. Because, you know, we don't like losing trades here at K2. And we're always looking to get better in one way or another, right? Whether it's adding a Confluence, adding another strategy, adding whatever we need to stay profitable all throughout the year. And that's why we're still consistent, because we evolve with the market. When the market changes, a lot of people start losing, but we don't lose at all because we just keep evolving with the market. So yeah, still in testing, but that is the variation 2 right there, J-Mac. Let's see. Let me scroll down a little bit. All right, Jennifer, we'll see you tomorrow. No problem. Patrick said, variation 2 is like variation 1. Always trade with fundamental sentiment, Sean. So I personally trade with the confluences. You know, that might just be me, but I've seen a lot of people trade with no other confluences, just trading strictly off the variation, and it works. But for me, you know, I like to be very conservative in my trades. So for me, I still use the confluences. I see a lot of people who don't use it and it still works. But for me personally, I still use the confluences whether it be a variation, whether it be a high-low, whether it be any other strategy. You know, the Confluence is always going to be number one for me with regard to retail sentiment and for fundamentals. Let's see. Yeah, professor said changing the borders and the wicks to black made a huge difference. Yeah, it makes it a lot easier. Rick said, I'll take an extra small shirt. Okay, let's see. B said, where would you say I went wrong for a 923 for a sell? Waited for a halfway pullback since candle's too big, kept up 923. So you're at 923 for a sell. Let's see, B, let me go there. So I'm trying to figure out why would you take a sell here? I don't know, are you following a strategy? Because I don't see any sells over here. Let me see. Oh, you're talking about the variation here. So at 920, at this time during the market, I was still looking for a buy. I'm not sure, like, I think fundamentals were still bullish. Or it wasn't negative 100. The reason why I kind of remember it not being at negative 100 was because it was at negative 100 when it was down at this point. So the thing is, if price got above this line right here, the fundamentals would have been less than 100. Because I was watching from here, like from the market, we got off the live session right here at 8, and the fundamentals were like at negative 101, right? So if the fundamentals were at negative 101 right here, if price was to go anywhere above this, it wouldn't be more than 100. So I'm not sure what it was like over there, but I for sure, I know I for sure was not looking for a sell right here. I didn't start looking for a sell until after 10. So like over here is when I started looking for sells, when price like started dropping below the certain point. Yeah, like when price was down here, this is where I was looking for sells. I wasn't looking for any sells at this point because I was active in the market around here. So not sure what the fundamentals were looking at. I know the retail sentiment was still at like 68% or 67% at that time. So I wasn't really looking for sells at that moment. I know when price got up here, that's when the retail sentiment started to drop. It was like at 65, 64. And then that's when I started looking for sells. So the main thing right here is, let's see. So B said, if I remember correctly, I'm pretty sure it was around negative 100. So yeah, more focus on short since buys change at the time of the stream. Yeah, so I mean, just looking at, so let me just timestamp. There's a couple red flags right here why I wouldn't have taken any of the sells. Let me see, what time did you say? I think you said the entry was somewhere around, I lost the entry again. Trying to figure out where that entry was. 923, okay, 923 right here. So there's a couple red flags why I wouldn't be looking for any entries. Oh, it's right here, okay. So I think the thing adjusted, right, the high-low. So let me just go over there to 923. Gotcha, okay. So the entry would have came right here at 925. So a couple of red flags would be the fact that the retail sentiment was still lower. And I'm just giving you red flags. I'm not telling you that this is what you didn't do, but I'm going to show you like what I would be looking at right here. So let me just delete all the stuff right here. And then we'll go back to 920. It was a 925. The entry came up. So let me turn on the pivots. Okay, so just looking at this here, you know, going back to everything that we look at and that we cover. First step is going to be retail sentiment, right? I remember retail sentiment was still pretty heavy on the short side at that time. It was like 68, I think. So I wasn't really looking for any sells at that time. I know the fundamentals were like, this was like all over the place. It was going like from green to red, going from below 100 to like below 80. It wasn't like really consistent. So the fundamentals were kind of like out the door. I wasn't really looking at fundamentals at all. I was looking at retail sentiment, and I was looking at the trend, right? So a couple of reasons why I wouldn't be looking for a sell here is the fact that price is above the pivots on the 1 minute and above the pivots on the 3 minute. This is like clear bullish right here, right? Because your entry came up at 925. So either way, I wouldn't have taken any sells here because it was bullish on the 1 minute. Trend meter is green above the pivots. I mean, it's like a clear trend to the upside right now. Even if you're just following it from like a bird's eye view, it was like clearly in a bullish trend right there. So these are a couple red flags that would raise. First one would be retail sentiment. It's still short. Just disregarding the fundamentals here, this is like one that that I probably wouldn't be looking at because the fundamentals are just screwed up all day. So retail sentiment would indicate not to take sells, and then the technicals here were also indicating for me not to take any sells either. I could tell that you probably FOMOed into it because I probably would have FOMOed into it too. So say, for example, I was looking at this and say I was looking on the clean chart, right? I was looking over here. Because don't get me wrong, I make the same mistakes everyone else does. Just because I don't do it on the live because I'm a lot more careful doesn't mean that I don't make the same mistakes. Because I'm just more careful on the live because people are always like waiting to call me out on stuff. So yeah, if I was looking at the chart like this, then I possibly would have taken it too. So, don't beat yourself up too much for it because like I probably would have taken it too if I was looking at it like this with no other confluences, right? But with me looking at it from this perspective, I mean, just looking at it from here, right? I would never take any sells because it's like such a strong push to the upside, and same on the 3 minute. But if you're looking at it on a clean chart and then you're looking at the fundamentals that are red and you're looking at retail sentiment where you think price is starting to shift, then yeah, you would take the sell. But the main red flags that I would look at was the fact that it was a clear uptrend on the technicals. So, tying all of your confluences together, retail sentiment, fundamentals, and technicals, I wouldn't have taken the trade. So, yeah. I mean, hopefully that makes sense to you. I know at the point of at the point of the trade, you probably weren't looking at all that stuff and you weren't thinking about all of that. You were just too focused on taking this. And the main thing that I wouldn't have taken right here too is that I would consider this a big candle. So what I was saying earlier, guys, one of the confluences or one of the confirmations that we're using when testing the strategy is to not take a trade when the entry is so far off from the closing price, meaning the high. So looking at this right here, you've already missed out on almost 300 pips, right, B? So when you see a big candle like that move 300 pips, what's generally going to happen from here? Price needs to retrace back up, right? And that's kind of what happened here. Price came all the way back up. So this is something that I haven't really discussed with you guys yet, but for the variations right here, if the entry is more than, I guess, 200 or yeah, if the entry is more than 100 pips, pass it like that. So say if the next candle following it is more than this, I generally won't take the variation because it's just too big of a candle. Especially if it's something like this, because this kind of sets up for like a partial engulfing, candle, or, it looks like it could be engulfing if it did close like down here. Generally when it's a big candle like that, it has to pull up a bit before it comes back down. So, I mean, there's a lot of different things that you could apply it be, but for the most part, it would be the fact that this candle is just too big. So that's something that we're still working on with this strategy. It hasn't really been an issue. I mean, you guys have probably heard during the live session, right? Whenever I see a variation, I always ask Maddie, hey, Maddie, are you going to take it? Because this candle looks big. And a lot of times we're like, the candle's too big. We're going to wait for the pullback. And then we just don't enter it. So that's something that you guys might want to keep in mind when you guys are looking for these variations. Because these variations are meant to be a quick little push. But I see a lot of reasons why this could have looked like a good trade, especially because there was a pending sell at that moment too. Yeah, exactly. So B's asking, yeah, I didn't identify the uptrend. What's the tool you use to identify the uptrend? I use the parallel channels. So looking at this right here, parallel channels, what you can do is you can just go from the previous high lows like this right here and just draw that, or you could even go from a wider one. You can just use the so turn up the high low indicator and then go from the previous high lows using the built-in. So using this right here, you just draw the previous low with the next low and then see if it's in an uptrend. So that would help you identify it. But there's different things you can use to identify the trend. You can use a trend meter, use the pivots, both of them work. But if you want to see it manually, just you can draw it yourself like that as well and see if it's in an uptrend. All right, so that's it with that question right there. Let me scroll up real quick. Yeah, it's Longi. For the variation 2, there's no rejection on the, there's no wick on the following candle after the high. Let's see, Ardonius said version 1 at 1050. All right, 1050 right here. Let's see. No, so let me go back real quick. Maybe there was another high there. Yeah, so not right there, Ardonius. So like looking at this right here, we got the low. So 1050 is right here. I'll set the low right there. No variation on that. In order for there to be a variation, it would have to reject directly off the same price point. So this following candle right here didn't reject off it, so it wouldn't be a variation. Let me scroll down. Yeah, no problem, JMac. Fidel said, would that be considered a version 2 variation that just happened at 4:30? Go over there real quick. 4:30, just about right over 4:30. Yes, that is correct. That would be a variation, but it's kind of risky to apply during Asia session because volatility is kind of low. But yes, you're correct. That would be a variation version 2 right there, Fidel. Right over here. And it looks like it hit TP already. So the problem, the reason why I wouldn't really want to apply this during Asia session is the fact that volatility is low and the spread's too wide. So even though it hit TP right here, you probably wouldn't have gotten pulled out because the spread's too wide. So I probably wouldn't apply it. Or if you do want to apply the variation, I'd probably go for a half TP. So instead of 100 pips, go for 50 pips instead, so that you can cover the spread, because the spread's probably going to be this wide anyways. But yes, Fidel, that is a correct entry for a variation version 2 at 4:30 right here. Yeah, so there's a low right there. The following candle is a strong opposite candle variation with no wick on the bottom side. So it basically just confirms a reversal candle. And then as you can see right here, price just shoots straight up to TP. All right, guys, we've been on the session for about 3 hours. I think that's it for the questions now. So yeah, I mean, that's good for now, guys. Hopefully all your questions got answered. I don't think I missed anything. If I did, sorry, but I don't see anything here. I mean, if I missed anything, just let me know. But just keep in mind that next week we'll have another mentoring session. Let me check my schedule for next week real quick. So next week we can do a mentoring session either on Monday or on Thursday. So those are the 2 days. I'll probably bring it up to you guys in the group. I'll set up another poll and then we'll set it up. So if you guys didn't have your questions answered today, no worries. We'll have another mentoring session next week. Hopefully this was like helpful to you guys, because I do this mainly for you guys, because I know a lot of you guys have a lot of questions and you guys aren't able to answer them during the live session. So I'll try to do these every week so that we can just knock out as many questions as you guys have, and then we can get going for the rest of the year. So I think that's about it, guys. If you guys have any other questions, feel free to send me an email or message me on Telegram. But I think it's time for me to finally have some lunch, or a late lunch, early dinner, because I've been on this for like 3 hours. I was gonna have lunch before, but I went to the gym, and then I didn't think this was gonna last 3 hours, so I just waited. So I'm gonna go take a break. So if you guys have questions, I'll probably get back to you guys within an hour or two. Go grab an early dinner. And if you guys have anything else, we'll catch back up on it on the next session. So have a great rest of your night, guys. If you guys have any questions, I'll see you guys tomorrow for the last live session of this week. Tomorrow is Friday. Keep in mind that it is NFP, so be careful if you guys do decide to trade. I'm probably going to sit it out, but I will be on the live session looking for possible trades. So other than that, guys, I'll see you guys later.